All right. Welcome everyone to the October AMA. This is October 20th, 2024, and we're going to start diving in. And so what I do want to do is I want to focus first on a lot of the questions the from the Patreon. As always, we got a zillion questions from there. Then what I'm going to do is open it up to you all. But first, let me just try and plow through a lot of these because, as you know, these have become really popular recently, and I get a zillion of them. So I'm going to hammer these out. Then I'll switch to just live questions. Got about 2.5 hours today. So let's see. I'm just going to go right down the list. Jeremy asked, and first, it was Jeremy, great seeing you in person at the start of the month. Did you have a regular process of cataloging trades you missed because you either didn't see it or passed on it? And so, yes. So one really fun exercise I used to do was, and really my trainer would assign this to us, and it was called good, bad, missed. And so one thing we would do each day is at the end of each day, we would write up our best trade of the day, a good trade we had. We would write up a bad trade we had, and then we would write up one missed trade. And I think most importantly for any missed trade, you want to figure out why you missed it. Did you not see it? If you didn't see it, how could you have seen it? Is there potentially a filter you could have done? Is there potentially a news source you needed? Is there potentially some type of scanner? So with any missed, you want to figure out how you could have done it. Is it that you just didn't process the trade properly? If you didn't process the trade properly, then I'm probably writing it up and doing some type of detailed review. So really my short answer is for many years, every day I would have I had this running Word document called good, bad, missed. And every single day, one good trade, one bad, one missed. And any charting software you or the community recommends, I don't know. I use Thinkorswim. I think a lot of people use Thinkorswim for charts. Some people use TradingView. For the most part, I've been pretty happy with Thinkorswim. And it seemed like TradingView had some pros, but also some cons. I'm probably the wrong person to ask for software just because I don't use a ton of it. On the retail side, when I was on prop, we had fully custom charts, but it seems like Thinkorswim is pretty damn good overall. So then this was a really good question from Neil, actually. He said, it seems like a lot of the emphasis on the biggest ops comes from mean reversion, meaning like the semis, the GME, AMC, GL, market panic, blah, blah, blah. Why do you think that is? In general, is there just higher EV and looking for stocks at extremes and reverting them? Or do you think generally more time and risk should be spent dissecting the nuances that lead to those extremes? So I think mean reversion is very powerful for two reasons. The first reason is because inevitably markets, due to liquidity and emotions and psychology, you inevitably get stuff that just blows out. You get panics that just go too far, and you get euphoria that just goes too high. That being said, I don't know if necessarily the biggest ops always come from mean reversion. Like, I do think me as a trader, that's one of my biggest strengths. But in general, some of the best money is actually always with the trend. So if you were to ask me like some of the really good money this year, like I think SMCI, some of the semiconductor breakouts were really good. I'm going to move this mic a little bit closer. Some of the semiconductor conductor breakouts were really good. And overall, like you will have a lot less risk and a lot of really amazing trades when you go with the trend with stuff that's in play. So I don't want people to sleep on how good some of the stuff like SMCI breakout was, even how good Apple 200 was this day. Stuff like that can be really amazing trades. It just so happens though that like, especially because a lot of the time I'm not sitting in my seat all day doing this stuff. Like definitely when I was trading active every single day, I was doing way more with the trend stuff, but it's a little bit harder when I'm just not watching all this stuff all the time, all day. So I don't necessarily think mean reversion is better. In fact, I think mean reversion can be really difficult sometimes, but I do think mean reversion is a lot easier to spot the crazy events. Like being with the trend requires anticipation. I need to be actively scanning and figuring out what's in play, what are the market themes and everything else. And one of the traders at SMB is just incredibly good at catching the big trends. And some of that can just be so powerful and you get so much skew. It's just that I've always had mean reversion as a strength, and I find it way easier to be reactive as a mean reversion trader. Like, there's nobody that doesn't hear about SMCI going up a zillion percent, then you can respond. There's nobody that doesn't hear that the market's panicking a zillion percent, then you respond. And I would actually point out that Neil cited, for example, GME and AMC, and I would argue that GME AMC, some of the actual best expected value by far was going with the trend on those tweets. Like my best trades during that saga were Roaring Kitty tweeting on those Sundays at what was it, 8 p.m. or so, and me buying overnight market in those. So that was definitely a with the trend trade that was far easier than anything mean reversion wise in GME. So yeah, important question. And I don't think there's anything special about mean reversion other than that I just happen to be very good at it and I can be reactive. Okay. Gory asked a good question. How did you deal with emotional part of underperformance, having self-doubts? And this is what I always laugh about. Having self-doubts, parentheses, if you had any. I am in the boom and bust cycle, at least I think. I have some good months when I capitalize on A-plus moments, but when things slow down, I bleed out majority of the profits back. I don't take very big hits, but I take a lot of paper cuts. So first things first, like it's so easy to think that like I am immune to all human emotions and all negative emotions. Absolutely had self-doubts. Like again, I was the person that was interviewing 2 years into the job with every resource imaginable. And I got in so many holes during my career. Like being a home run trader, inevitably, like once a year, I would take some huge swing. I would lose, I don't know, a couple $100,000, and I would be in like, I don't know, some type of. My holes didn't last that long necessarily, but I'd say there were some years where you're in a hole for 2-3 months, something like that. So I do think I'm not immune to that, and I think part of dealing with that is like you need to turn these emotions into just adaptive uses rather than maladaptive. Like the comparison game and all that stuff can be super, super difficult, but it's okay if we use emotions to fuel motivation and drive. And the other thing, and this actually came up, I was at SMB last week and I was talking to this one younger trader, and he's made amazing progress. Like essentially we looked at my old Trillium P&L curve that's coming up in this interview we're about to release. And the first couple years I did like pretty much nothing. I then start to go up. Then it wasn't until like year 3 or 4 where it goes like that. Then it goes that, then it goes that and that, and starts to go really asymptotic. And when you zoom out and you look at that curve, it looks like that pretty much what happened was I did that. But when you zoom out, you fail to see the zoom in, which is for the most part, every single day, I was more or less going, if you zoomed in like way in, I was going up, down, 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 up, down. And there's so many setbacks and obstacles along the way. And if you look at the average trading career, like there's even I know so many traders that have had struggling patches, and it's super depressing, it's super psychologically difficult, but when you look at their long-term P&L curves, it's beautiful. I know one trader that's been struggling for like a year or two now. Nevertheless, his P&L curve overall is still like this. It flatlines, it breaks out, it flatlines, it breaks out. And so I think a lot of that is when you're in the trenches, you feel the day-to-day struggle because you feel all of that and you don't see your big picture progress. And like if you're a couple years in, like it's supposed to be difficult and suck. You know, you're at the most difficult part of the learning curve. But once you start to make progress, if you zoom out, that's when things look better. And that's where I would argue, like that's why it's so important to focus on what I call the bobblehead concept. What that concept is, in summary, is you forget obsessing over the P&L too much, and you really just think, how can I get better today than I was the prior day? As long as you put 95% of your effort towards getting better each and every day, and you make tangible improvements to be better, like it's so freeing because then you let go of the ups and downs day to day. And that's why one of my big goals each year was not some P&L number. It was to get better on 200. I think it was 200. I was doing 200 days a year or something like that. And that's what frees you to measure yourself based on the progress you're making rather than like again, most traders are going to lose on like probably 30, 40, 50, 60% of days. So if you get upset and view yourself as a failure, like that's never going away. I think me at my absolute, like obviously there's amazing periods of trading, but on average, I would say like I don't think I was positive more than 6 or 7 days out of 10 on average. I might have been positive 5 to 6 days on average, but like my winners obviously outweighed the losers, but you still feel like an idiot or like you failed on every losing day. And it's kind of, that's what makes this job so psychologically difficult. And you need to reprogram that viewpoint. Um, so I guess it's like, it's supposed to take a toll. And like, that's what makes this job so hard. Um, and I think the best cheat code is to just kind of break that value set of I judge myself based on my P&L each day. Judge yourself, did you get better? And like ultimately like embrace the process of getting better. It's the other thing too. I remember from the first couple years, I remember very well how psychologically difficult it was. I felt all that pain and all that emotional uncertainty. Am I going to make it? Man, I'm putting in so much effort. Do I have what it takes? And I knew that every single other person felt that. And that was actually almost a competitive advantage to me because I had so much grit where I knew, like, look, I don't care what this takes. I know this pain. I know everyone's feeling it, and this is going to motivate me. And I use that as fuel. And not everyone can do that. And that's part of like, I think the X factor that really can push some people. What makes a David Goggins is he was able to use the bullying and the trauma and everything else and turn it into fuel. Not everyone needs to do that. There's many different ways, but that's how I think about some of that. Tara, who's here, and apologies if it's Tara, sorry. She asked, I assume how do you define play of the day? What are the requirements? Would you consider Netflix on 10/18 to be play of the day? So that's a good question. And one thing that's important is I might define play of the day just based on how I view it. And I think it's important for you all to come up with what do you consider your own plays of the day? Like what was the best based on your playbook? And so it's not going to be an objective measure. If you take 10 different traders, you might get 10 different answers on what the play of the day was. But that's okay. No one's wrong. It's just what the play of the day was for them. So for me, I was just viewing it pretty much like what was the easiest money trade? My top ops from September is going to be posted pretty soon. I thought the easiest trade of the month was Tupperware last month. Did this This isn't good. Why is this not going? Oh, because this went bankrupt, didn't it? I understand. One sec. Well, it was need Tup Q? Tup BQ. There we go. Oh, thanks, Ozzy. Yeah, good call. Okay, so what I wanted was this. Oh my God, this is a mess. 15 days, 2 minutes. But then it doesn't allow me to scroll. Okay, moral of the story, to make this short. Oh, this was, yeah, back in September. Okay. This is going to be frustrating for me. What are we doing? Okay, moral of the story. I thought the Tupperware bankruptcy was an easy money trade. So that day, that would have been my play of the day. The real question that I'm trying to get to was Netflix on 10/18-24. Let me get this on demand off. And so this was big earnings blowout, I guess effectively on Friday. And so would I consider this to be the play of the day? For me, no. But again, it really depends just the answer for you. And for me, there wasn't this made a huge move, but I don't really view any way to really capture this stat that well. Yeah, I don't know. I'm never so great at some of this after hours stuff. So for me, no, this wouldn't really have been anything I super crushed. But I think the most important and bigger point is a lot of this stuff is okay, you figuring out for you as a trader what what you should have captured and what would have been good. Roberto had some questions, who's also on call. So algorithmic breaking news trading, what do you think about deploying a low latency execution algo? I think it is awesome, of course. Like it's complex. I think some people do stuff like that. And of course there's amazing money in it. Yeah, I think it's awesome. You're the king of mean reversion. Thank you. I'll take the crown, but who knows? There's probably better out there. What do you think are the core principles and rule of thumbs for developing consistent, profitable mean reversion trading systems? Okay, so I mean, obviously I can get infinitely deep in this. I would say the essence of rule of thumbs are you don't have fresh fundamental news that changes the value of the security, however one might define that. You have an accelerating slope, price over time, like something really waterfalling or going asymptotic. And you have a huge flush out of volume where you get a massive exchanging of hands. So oh God, am I really going to forget what this, oh man, what was the ticker that I always loved to use? It wasn't GFT. Man, there was this one. Hold on a sec. Let me look this up. I can't believe I'm forgetting this ticker. It's one of my go-to. Oh, it was GOF. That's what it was. Man, I'm losing it with my old age at this point. So time frame, 2 years. Okay. So like this GOF, this was a closed-end fund, and like closed-end funds normally don't move that much. And so this stock, had a little breakdown. We then break down again, and just that's such a huge acceleration. For this thing to lose a couple points, we get massive volume capitulation. That's kind of what I really, really look for in a capitulation. There's a lot of just textbook charts that you can compile over time, but I'd say that's one of them. And those are the big picture principles. Of course, I could get more granular, but it could also take forever. Sean, who we also have the pleasure of having on call. 2 questions. So Sean has loved Atomic Habits and The Gap in the Game that I recommended. Any other must reads that I would recommend? Those are pretty up there. I think, let me see, I've got a good Evernote list. Let me see if there's any on my Evernote list that might be useful to you. Atomic Habits, Why We Sleep. And so I think as far as practical examples, Atomic Habits and Why We Sleep are super, super awesome. Mastering the Market Cycle by Howard Marks is kind of interesting. But as far as like super, super applicable, I mean, Why We Sleep, I mean, especially that was what, Roberto that asked me about sleep. Okay, so Roberto, if you wanted the absolute deep dive on sleep, Why We Sleep is incredible. Stay tuned for the consolidated version of my recommendations when that video comes out. It's already been recorded, so I mean, it should just be a month or two. But I guess because I can't find a good video for Roberto, the short answer of sleep, I would say, super, super cool, dark room, very, very high regularity, meaning there's actually some research that sleep regularity might be even more important than sleep duration, meaning going to bed at the same time each day, including weekends. General rules that I think have a huge effect on me personally: eating earlier and lighter meals for dinner. Like if I have a heavy late meal, that has a huge effect on my sleep. Obviously, no alcohol. One other thing that's super important is the no phones in the bedroom and having a very, very clear wind down routine. Like if I want to go to bed at 10:30, I pretty much shut things down at around 9. Like 9 to 10, I might be reading or watching a show. By 10, I'm mostly doing either like light reading, kind of some breathing exercises, getting ready for bed, and then it's fully shut down. The worst thing you can do is stimulate yourself with markets, charts, emails, anything stress associated. I really, really try not to check the market before bed. I also try not to check the market right when I wake up, although that of course is much harder. And ultimately, the more you do this stuff correctly, oh, morning sunlight is essential, exercise is essential, but the more you really build that circadian rhythm day in, day out, the better it is. You really want to give yourself probably an 8.5, 8 to 9 hour sleep window of time in bed. And ideally, you're sleeping at least 7 hours. There is nobody that needs less than 7 hours of sleep, pretty much. And the people that think, oh, I feel fine with 4, congrats, you're used to being permanently impaired. One other thing that's interesting, by the way, is I've dealt with so many traders that say they function totally fine with the sleep they're getting, and they might be getting 4, 5, 6 hours. Like at this point, and I always knew that was bullshit to begin with, but at this point, so many traders that I've worked with that were not getting proper sleep are now getting proper sleep and have come back to me and say, Lance, like, dude, you were so right. That was game changing to my life. Thank you so much. The number is so high, I can't even tell you. Like I've literally had SMB traders call me and say, Lance, like, man, I didn't really take it so serious on that sleep thing. Now I'm actually doing it and it's game changing. So if you're one of those people in your head that's like, oh no, that's not me, I'm okay with 5 or 6, like trust me, you're not, and it's affecting you in so many ways you can't even imagine. And your body's just adapted to the norm. Rajan was asking, why not write in the morning? So it's not, for most people, it's probably not the worst thing in the world. Maybe not that I'm a doctor or really any of this should be great advice. If anything, I'm, just a day trader at the end of the day. But for me, the big thing that I struggled with is every morning when I would wake up for my whole career, I would immediately check the market. If I had any semblance of consciousness, I was boom, checking Thinkorswim. And so what this ended up doing is creating a very anticipatory response in my consciousness. So like the second I was remotely awake, my brain would start to go, need to check markets, overnight risk. What happened? Where are my positions at? Need to check, need to check, need to check. And so that caused me an inability to go back asleep, to sleep deeply, and to have enough overall total sleep. And so you really try to remove anticipatory responses in the morning because those affect the depth of your sleep. Like, look, if you're some amazing sleeper and you're getting your 8 hours, no problem. That's great. It's probably not a big deal for you. But for me, literally every morning, and still to some degree, like it's so hard to break this habit. And that's part of why I'm going to really wind down my trading is like, so at least for me, like with overnight risk and all this stuff, and you're like, oh my God, is any low float or anything going crazy? Like it was such a powerful anticipatory response where it was really affecting the quality of my sleep. And again, to be clear, that is at a subconscious involuntary level. I am not voluntarily choosing to sleep later as a result. I had no control over that. When you have these anticipatory responses, your body does that automatically. So yeah. As far as books go, Sean, I mean, those are the big two. Why We Sleep for the Sleeping is another great one. I mean, the Howard Marks book I just find pretty interesting overall. Any of the Market Wizards are phenomenal, but for true practicality, there's really not that many. And that's why I view Atomic Habits as the Bible, because I think it's just really incredible for that. And then you asked, how did you go about figuring which setups were your A+ easy money trades to start adding size? So obviously the stats speak for themselves, but I think you were asking, is there just kind of a certain knowing after a certain amount of experience? Combination of both. Yes, it's a combination of both. And it's fairly easy because the easy money trades, by definition, you're generally making money in them. So it becomes this very easy just feedback loop where I think we're good enough at recognizing patterns. Like if you're losing 8 out of 10 times and getting your butt kicked in some type of trade, like I don't need the calculator to know I'm losing 8 out of 10 times and getting my butt kicked. That being said, if there's some trade strategy that I'm winning 8 out of 10 and I'm making a ton of P&L from, I don't need to crunch it out to the decimal to know, oh my God, I'm doing really, really well in this and this is working. So it's a mix of both. Obviously, sometimes we can fool ourselves. So data is going to be the ultimate decider, but ultimately data. And so one thing actually is I'm going to end up making a video on this probably tomorrow, just a really short video that I'm going to post. But I spoke with this trader, Kyle Williams, who's a really, really good seven-figure trader. And he's going to just keep on growing and doing better and better. And one analogy I gave him on sizing was this poker analogy. And I asked him, if you're playing poker, what's the best way to how do you make the maximum amount of money? And the answer to that is it's not you just play aces, right? If you only play aces, you are leaving a ton of money on the table because you're not making any money when you have kings, queens, jacks, 10 jack, king ace, all that other stuff. And so the way to make the maximum amount of money in poker is any hand with decent expected value you play, but then of course as it gets better, you start to bet bigger as it gets better. And so he was asking how to level up his trading, and the answer was for the really good, for really good, just, yeah, I don't know, easy money trades, you want to start scaling those because they're frequent. Those are like the tens, the jacks, the queens, whatever. But then all that P&L you make from gradually sizing up your easy money trades allows you to bet much more on the best hands. Because imagine at a poker table, if you're making an extra $500, $1,000 on each play, that's an easy money trade. That gives you a lot of cushion to bet much more when you get aces. That doesn't mean you need to go all in or anything, but you have a lot more cushion. And so that's something we were working with him that I'll probably do a little bit more in-depth video explaining that. But yes, a lot of data for the most part.
Can I just ask I'm sorry, can I just ask like one quick follow-up question on that?
Yeah, of course.
Yeah, so like, okay, so I guess in my particular situation, like I kind of have like maybe like three plays that like I just kind of go to or whatever, right? And so like let's just take one play or whatever. Is it like within that one play, maybe I have like four or five different ways of entering that play,
Mhm.
right? That's in my playbook. So it would be like you would be saying like, okay, which way of entering that play is like the most obvious or the one that kind of wins the most often type of deal, and then
Yeah,
try
and
to.
just what has the best data backed up to it. And so I
Okay.
definitely would be crunching the different data on that. And
Okay.
so a lot of my system and a lot of my entries and exits and everything else, it came because I was trying different things and a lot of the stuff just wasn't working in the aggregate. So very quickly I realized where I needed to be buying and selling and how I needed to be trading stuff. So yeah, I would definitely, if you have multiple options, I would be going through the data over the long run.
Okay, cool.
Yep. AG asked, for an average full day of base hits, what is a good measure of total day risk reward that you wouldn't want to give back? So he was saying, I'm trading small with $100 stops, and sometimes I'll get up to 300 to 400, then I'll give some back. It's hard for me to gauge prudent risk management with this size. Because if I was trading with $1,000 stop, I think I'd be pretty pissed off to give back 3 to 5 grand in profits. So one important thing is, like, in theory, we want to follow a logical framework and be consistent in it. So like if we're trading $100 and we can get up to $400 and we might not want to give something back, that should stay this, like whatever that amount is should generally be consistent and rational based on something other than like, oh my God, it seems scary to give back the money. Like a lot of traders start to trade suboptimally when they think about it in money terms rather than what's like the true right answer. So the more important part is like it's not about what is the right amount to allow yourself to give back each day. It's really a question of like do the opportunities justify you betting more? Like if I'm up 20 grand on a day and then an amazing A plus hand happens and I end up losing 70 grand in it, you can't look at it and be like, oh my God, I should have never risked 70 grand. I should have never gone from plus 20 to negative 50. You can't think that way if the situation genuinely allowed for that, right? So the more important thing that I kind of try to do is did I risk the right amount regardless of the P&L? Like if some opportunity comes up and if I get ace king and I'm willing to bet 50 grand on ace king, I should be willing to bet the same 50 grand regardless of what my P&L is, right? Like whatever my P&L happens to be on a certain day, that shouldn't affect how much I'm betting. I want to objectively view how good the quality of the opportunity was, right? If I'm up 50 grand one day and I say, oh my God, like, hey, now I have 10 jack. This is a marginal hand, but I'm up. So therefore I need to parlay this and I need to bet aggressive. If I'm supposed to only bet 20 grand on that hand and I bet 50, that's a mistake. If I'm supposed to bet 20 grand on that hand and I bet 5 grand because I want to protect my profits, that's also a mistake. So it's not about what's the right amount to give back. Like you can't generalize it. You need to ask, am I betting the right amount given the opportunity set? And trying to really view the opportunity agnostic to your P&L. Does that kind of make sense? Because I think this is pretty important. Um, yeah, so I'm getting a couple thumbs up. That being said, I did use give back rules, and the give back rules were kind of largely just a guideline, assuming the current opportunity set. So I might go through a day and I might go up 10K, then up to 15, then 23, up to 23K or something. So as part of my daily report card, if I'm up 23K and it's a slow day, if it's a slow day and it's a crappy opportunity set, I might say, look, I don't want to go back and lose, I don't want my P&L to go below 15K. I don't want to lose more than 8K. That assumption is based on the opportunity set. If all of a sudden the headline of the year comes out, that give back rule is irrelevant to me, right? If a year making opportunity comes out, just because it was a slow day, or just because I was down 5K or 10K or 20K, if the opportunity of the year comes out, I don't care that I'm down 5 or 10K. I need to bet according to that expected value as if I would bet on any other day. Of course, within my risk limit rules, right? Those are to protect you. But beyond that, you need to do just your sole job is to bet according to the EV. So that's a very long-winded way of saying that, like, even though I used give back rules based on the current opportunity set, that was more so to mostly protect me from like, okay, it's a slow day. I'm up 25K, and now I'm just gonna give it back in bullshit because I feel good and I'm I'm gonna push the gas because I'm up some P&L. The other thing I'll see is like, a lot of the times there might be a good opportunity off the open. So I might be up, say, 50K or something. And then I might say, okay, it's slowed down. Now I only want to risk 10 to 15K. Part of that, again, is because if I'm having a good day, I don't want to give it back in suboptimal plays. If I like in general, those give back rules would prevent me from like giving back once it's slowed down. That's the true point of why I did that. Hey, Lance, like just think if it's slow, you don't want to give back in this is like you get this house money mentality. Just because you're up P&L does not give you permission to blow it in suboptimal shitty sets or shitty opportunities. So that's really what I would use that for. But it was not standardized. It was really based on the opportunity set. And if something amazing happened, I would absolutely do that within my risk rules. Yeah, long-winded. Okay. So Steven asked a question, and it was good meeting Steven at the beginning of the month. Curious about the short vol trade that you did in oil. As I understand it, you shorted vol while at the same time willing to be assigned if the worst were to come and price were to hit the strike, like a limit order in a way. So as prices spiked up to $78 in oil, did you take the short position if you had any of that strike, or did you roll them out further? I understand capturing a decrease in vol, but want to know more about your thoughts on the limit order perspective. So generally, I would say the limit order perspective of viewing selling an option is not accurate. And let me explain why. So with an option, oh God, I hate this open interest stuff. 1 second. Okay. Okay. So with an option, so what I did, right, when we were starting to spike like this, I was selling calls, like medium-term calls, and I was selling some puts, because vol was exploding, right? Everybody was so scared. And I hope you guys watched that video, but I made a pretty good argument for why I didn't think like essentially the market was already pricing in like a pretty nightmare, not a nightmare scenario, but a very, very bad scenario when it's like, whoa, that seems very crazy that this should spike $10 when I viewed the probability of production coming off being very low. So I was selling calls. And so the issue with viewing it as a limit order, like let's say I sell, I'm just making this up for example's sake. Let's say I sell a $74 call for $4, which would theoretically, break even at 78. You can't view it as a limit order because of the time component. It's the option to exercise. So if I put a limit order at 78, I would have been filled for that. I would have been short the actual oil contracts. I would have then been short, whatever I sold worth of futures contracts. Because it's an option and because there's a time component, you're really just getting a financial mark, right? So if let's say I sold it for $4, I sold 74s for $4. When this goes to 78, those $4 calls might be worth like $6 or $8. So I'm not getting short the actual contract. I'm just getting a financial mark against my position. So what that means though is when oil goes from 78 all the way down to 68, that does not mean I made $10. I did not make $10. The maximum I can ever make is what I sold that contract for. So if I sold a $74 call for $4 and this goes all the way down there, I only make the $4. I do not, and not only do I not make the full $10, but I was never short the actual oil contract. I was just taking a financial mark. Meaning, again, if I sold $1,000 worth of call options and their price doubled on this move, I would just be down $1,000. In no way would I take that. And so that difference matters because oil did end up falling $10. I did not make $10 on that. All I made was my premium. There will be some videos on the internet on options that can explain that more. That's probably the best I can explain this within the realm of not wasting, a shit ton of time getting into like options. So then the other thing too that's interesting, and just because you mentioned it, I rolled them out further. So I had a bunch of options. I would do some weeklies, I would do some monthlies, and I did some Jans. So as those were rolling over and expiring essentially, and definitely some of mine would have been out of the money if we stuck up there. But then of course, we pulled in. So like the 18th, I guess that was Friday. Yeah. So the 18th came. So a lot of those expired worthless. Like, so now oil's down a lot. So I'm not going to sell more with the same level of aggressiveness, but I don't like, let's say I have 1,000, well, I mean, that's a ton for oil, but let's say I have 100 contracts and they expire. I don't mind, writing a little bit more for November because you're going to get the time value of a whole other month. But because oil's pulled back so much, it's not as juicy. The premium I got up here when option volatility was just exploding is so much higher than what I'm going to get now. So you got to be very, very careful. In general, with options, which I'll get to at some point, in general, I'm only writing them when the tails are blowing out. When things are exploding, that's when I want to write them. I almost never really want to get caught with my pants down where I'm already positioned into, like, I almost never want to be short vol into a blowout move. You can lose so many multiples of your investment selling premium and get totally run over that way if you sell before the tail blow out everything. So that's a short answer to a question that will otherwise take me a long time. So Ben asked, did I ever struggle with patiently waiting for setups that meet all of your criteria? You need to be present to make a trade worth going for. He's getting better and continually rewiring his brain, but on slow days, he sometimes lower his standard. Yes, yes, and yes. Again, in no way am I some superhuman trader with perfect discipline. What I do think happens is over time, you firm up your lens for how to view your playbook. Like you get more ingrained in your mind with what a good play is. And so I think like most people are able to improve over time, but we're never perfect. All the time, that would happen. It's part of being human. Um, so yes, I would also make that mistake, and again, in no way did I ever stop making that mistake. So it's something you struggle with your whole career, but you just get marginally better over time. And more importantly, though, as you get better, bet sizing helps you make more on the good trades so that then, like, I would say if you accidentally play six jack or seven jack or five jack or just some, 10-5, when you play some mediocre hand, as long as your bet sizing is small enough on the mediocre hands, those should eventually just wash out and be rounding errors compared to the good trades. So that's what I think really happens is as you get better and better, your bet sizing improves and it's okay to take those little scrapes. Paper cuts are fine as long as you just connect on the way better hands, the pocket pairs and everything else. So then it was, how do you build the muscle of knowing when to get aggressive in your best setups? When does, wow, this is such a great setup, and knowing you have to push size and or hold for a longer period take precedent over the easy money trade consistency? So I would say that ultimately comes with experience and studying. So I had an Evernote folder that would be, the 2017 top ops, the 2018, 2019, 20. And so I would spend so much time studying the really, really big plays. So in the moment, you start to build this consciousness. And it might even start where in the moment, you might ask yourself, is this an easy money trade? Or is this a home run trade? Or is this a no trade? And so what I would generally say is like when stuff's totally going crazy, eventually you just get your spider sense that it's like, okay, like something is happening here that I rarely see. And so take the recent example in the August 5th panic. Like as I did in a Traders for a Cause presentation on this, like this move in the Nikkei was bigger than even during COVID. So like this was beyond a once every five. This was like all-time volatility for it. So you get a feeling that like, oh my God, this is as crazy as I think it is. When you see SMCI going up every day, that is as crazy as you think it is. So I'd say a lot of that just comes from experience and just really studying and knowing exactly what you like and you're looking for. And so this came up, I think, in a couple questions. So I'll just tackle this. What's going on? MSTR, even though it didn't work that great, I did really enjoy this MSTR $200 breakout. Well, not that I traded this, but I mean, just I do think this is a good. I do think this $200 break is really worthwhile, and I will end up writing this up at the end of the month. And so what's so nice about this is MSTR really shouldn't be up here at all, right? Like it's just holding Bitcoin. It's way overvalued versus the holdings. Nevertheless, Bitcoin isn't anywhere close to highs, yet this is held up so super well. We have resistance at $200. We kind of stopped there multiple times. And then on this day, I want to zoom into the intraday. So even intraday, this has a beautiful setup against that $200. Pretty steady move. Like, yes, we start from 188, but this is all steady. We consolidate over. Then we really nestle up close to this 200. Like between this being daily all-time high resistance and this beautiful setup intraday, not that it's so amazing, but this is definitely good enough intraday where this is just such a no-brainer buy. And you can buy this $200 break to catch that leg, and maybe that's it. You can buy this as a swing, and really, we closed pretty damn strong. I know we ended up failing and kind of collapsing the next day, but that's okay. That doesn't mean there's anything wrong with this trade. But yeah, I think this was definitely well worth having on and well worth looking for next day follow through. And yes, this ended up kind of pulling back, but that's okay. I still think this was a very much worthy trade, and I think recognizing that is good. Would I consider the next day an exhaustion gap? No, it's just no. We're just breaking out really. This was essentially day zero of the breakout. That's just the next day. I don't view that as an exhaustion gap. This was something I'd be fairly hesitant to short to some degree. Okay. I helped Nick already, Mattia. So Matai is asking, can you explain how to trade big position size from a technical perspective? Any order entry and exit tips, assuming that I don't want to anticipate an entry slash exit trigger. So I think as you start to trade bigger size intraday, that is where understanding the level two box and the level two book is really, really important. Being able to see what liquidity there is on the bid and the offer makes it so much more important so that you can kind of know where you're going to get the liquidity. Meaning, if I wanted 10,000 shares on that intraday breakout and there's a 15,000 share offer at $200, I know that as that guy gets taken, I need to take the majority of that. In fact, like because I want such a huge portion of that $200 offer, I might already just have my 10,000 share offer queued up and be ready to just take that guy. The other thing you can do, and I often use quite a ton of, is stop orders to get into or out of my position. So if I see that there's a 12,000 share offer at $200 and I want 10,000 shares of that, I might even queue up a stop order 199.95 as the stop trigger and queue it up to 200.10. Meaning that the second someone pays 199.95, boom, my order is going to get triggered, and that's going to help me get the liquidity way quicker. Because guess what? If I'm trying to get 10,000 of the 12,000 shares, like I can't diddle around. Like that's going to be gone in a second. I need most of that. If there's a 400K offer and I only want 10K of them, and there's an offer at $200.05 for 10K, I might not want to mess with that 200K 200,000 shared, or I forget what numbers it said, but I might not want to mess with that huge offer at $200, and I might just want to put a stop in at $200 and 2 cents or 1 cent, and pay through to $200.10. So that's where being aware of the level two box and book and knowing like, okay, if this play fails, let's say this breakout of $200 fails. If I have 10,000 shares of this, what do the bids look like? Is there nothing really on the bid for $1? Or is there like maybe there's a 30,000 share bid at 199.90? If so, then I feel really comfortable getting that size because I know I can just hit out onto that guy. 1 second, I'm gonna get some water. This is a lot of talking. 1 sec. Does that kind of make sense what I'm talking about there with the box and how important that is?
Yes, sir. And actually, it's gonna be very interesting to learn about that at the exit, because entering sounds like very practical. You see the that offer or that bid right there, and you can work on that. But if the market is very fast, you are already in, and you want to go out. That's the real skill that that we need to develop. How to
Yeah.
get out of a big position. So how
Yeah.
would you do that? Or how do you usually do that?
Yeah. So often it's going to come down to, I mean, one, being acutely aware of what liquidity there is on the box and the book as I'm describing. Then the other thing is like, you want to be so fast on those keys. Like, and this was what's so important, like in day trader world. And again, if you're not playing in day trader world, that's fine. Like if you're just trying to hold something for 10 days, this really won't matter that much. But on the really short time frame stuff I was doing, especially at the size I was doing, so often I would need to be the whale on the stock. If there was 30,000 shares at $200 and the offer only had 40,000, I needed to be the person that had my order queued up, and I was going to be the whale that boom, just punches that offer, and then everyone has to scramble after me, and vice versa. Like if if there's some liquidity somewhere and I have, like, let's say the only really big bid was at 190.90, or sorry, 199 and 90 cents, 199.90. If that bid is for 30,000 shares and there's not much below him, and let's say I just paid $200 and got my 10, 20,000 shares. If there's only a bid at 90 cents and nothing below him, I need to make sure I'm queued up and I'm ready to hit that guy. Like, I need to be the person that's acting the most decisively, and I need to be the person that's taking all the liquidity if I need it. So often in day trader world, for the size that I was using, I needed to be that person. And then you need hotkeys that are hyper optimized to that, right? So I was able to set stops so lightning quick versus the rest of the market. I was able to get in and out of positions so lightning quick versus the rest of the market. And I needed that for the size I was trading, especially if you're scalping. Like, if you're scalping and playing the scalp game where every couple pennies matters, you can't be the person that's fumbling, right? If that goes from 200 and just quickly shoots up 50, 60, 70 cents, like, you can't be the person that's fumbling around with their orders and then it retraces 40 cents, right? I want to be the person that's there in split seconds getting taken and everything. So would there be any video on hotkeys and orders and MO? I mean, it's probably not. Like, someone else was also asking about like order routing on Twitter and stuff. Like, it's really hard to generalize, mostly because like it depends the type of trading and also even the routing. Like, I don't think the routing is super uniform across brokers. Like, people have different routes and different defaults and everything else. So it's probably not possible. And it's just someone's got to just figure out with their own brokers and for their own style of trading. Was I able to do that on TOS? So, I mean, a lot of this I was doing all on the prop side where it was all custom software. That being said, like, I do know retail can just program all this. Like, I do know that on DOS, you can program all sorts of crazy hotkeys. Thinkorswim I mostly use for the charts. I don't know if I've ever done order execution. I mean, it was probably like 15 years ago that I was probably doing orders on Thinkorswim, so I can't really speak to some of that. Well, all I can say is that I do know that everything I was doing is possible on a retail side. It might take programming and it might take work, but I do know it's 100% possible, and there's people with these custom hotkeys. But yeah, again, it's super hard for me to go beyond that for the most part. Okay, so then Alexander was asking, I'm curious about how strong you felt the EVGO, EVGO news was and how you would go trading about it. Okay, so yeah, this I saw. So Alexander was asking presumably about this question or this news on 10-3. And so this is important. So this came up in the September top ops video that's going to be out in like a week or so. And it came out with the Intel headline. Essentially, Intel got some type of government contract. I don't remember the exact numbers. All I remember is that Intel got some contract that was like a large percentage of its market cap. And I spoke in that video about how anytime you get like a contract, a deal, or whatever, that's a large percentage of the market cap, usually you need to say like, holy shit, this could be really, really big. And coincidentally, that's exactly what happened for EVGO. Even though I don't think I knew about this yet when I made the video, which is funny because this would have helped. You know, it's unfortunately I didn't get the video out in time, but this would have helped people for this headline. But EVGO, I think they essentially got some type of like $1 billion contract type thing for EV charging. And their market cap, I don't think is that huge. I don't have it just off my head right now. But that's also the benefit of like, you know, with Bloomberg or like really good software or all this other stuff, you can check what the market cap is super, super quick. So in general, this was going to be a really, really huge headline just based on that heuristic. Let me see if I can go. So that being said, let me go to this. So 10, 3, 24. Ah, shit. Oh, God. 10. 324. Okay. So a lot of the time, like on some of these headlines, and because Alex then goes on to ask, and for the SRRK news on October 7th, like, so a lot of the time I don't try to overly interpret the news too much. Like if this headline were to have come out during market hours, I'm largely trying to buy that headline as quick as I can, then just use my very simple system using prior bar lows. And beyond that, I just trade the setups. Like for me, knowing that there's news is somewhat binary, like I would definitely think, oh my God, based on those numbers, this could be a very, very big deal. But I'm still kind of just trading my setup. So that being said, like this price action during the rest of the day, there's nothing here that I really would have touched otherwise. Like there's nothing, there's no setup for me. So like unless I'm buying the breaking news headline, I otherwise need a just really, really clear setup. I think that was pretty much the same for some of the rest of these things. Yeah, so this had huge news. This had drug data, this SRRK, I believe. Maybe I'm wrong on this one. Scholar Rock, I don't know. But anywho, I did look through these at some point. And so the gist was like, unless I'm trading the actual headline using a simple system, I'm not overly interpreting these headlines. It's almost like that Netflix question where it's like, look, you know, yes, Netflix made some massive move, but unless there's a setup for me specifically in my trading, I don't necessarily trade it at all. AG asked ADMA on 1010. 1010, let me go to this. And pretty soon I might start to open it up to questions. Okay. Oops. So I would assume, let me read the rest of this. If something is super extended, I've used previous 50% of the candle and previous close. We take such tight stops, and that's sometimes. So he's saying sometimes the profits will go way further than where he's trailing out. So for this, and I assume he's just presuming like this break here at these lows, and this is the setup he's referring to. So in general, my default stop tends to just be taking prior bar highs. So for this, if this is indeed what we're talking about, I'm shorting around here, and I'm just simply covering right there. Yes, this kind of capitulates, so maybe I'd be taking some off intra-bar. But I think that the bigger point is like we take such tight stops that sometimes profits go much further when you trail out much less. And it's not really about that. Like the question is what performs the best in the aggregate. I might catch my leg and the stock might go up 3 times more than that. But I don't care about any given data point. I care about what's the optimal stop over 20, 30, 40, 50, 100, 200 data points. And what I've found is that for me and my trading, right, which might not be true for someone else, but for me, generally using prior bar highs and prior bar lows catches me the leg I want to catch, and it catches me the most probable leg. So yes, there's going to be individual names that go much further, and there's going to be times where like a much better stop would have worked if I did something different. But like you can't cherry pick and say like, oh, in this play, this stop would have worked way better. Unless there's some way to determine what stop I should be using under each situation. Ultimately, like I think what happens in trading is too many people spend all their time looking for this like siren song of like the perfect stop that's going to catch you the perfect move every time. Like there is no perfect stop. You can never ever catch 90 or 100% of the leg that you want every single time. It will never ever happen. There's no situation where that works. And certainly if it does, I've never found it and I've never heard of it. Your goal is simply to capture the most chips on average. You know, it's like saying, oh, there's some perfect way to play a poker hand. You know, there isn't. There's ways to play poker hands that on average are going to result in better. I know I want to bet more on aces than I do 2-7, but that doesn't mean that aces are going to win or that 2-7 is going to lose. But in the aggregate, those rules serve me well. So I think that's just the important point to make. Oh, this was actually maybe one of my favorite questions. Michael had asked, can you tell me about how you slash Trillium optimize your office environment to be as high performing for traders as possible? So I got very lucky where essentially the Chicago office was a newer office and it was a smaller office. And when you get a smaller, newer office, you can have a lot of control over the culture. And you're not dealing with so many just like legacy culture issues or legacy traders that are just stuck in their ways. And you can really shape the environment and the culture. And so things we did, I mean, probably the biggest thing I did is I tried to focus on building a collaborative setting where we focused on the process. So rather than like Trillium to some degree had very much a me versus everyone else culture where a lot of people were secretive and wouldn't really share. And when I was able to build an office, it was like, no, guys, we're all going to help each other be better. Like trainees are going to be taught by experienced people. We're all going to openly share. We're going to all openly help each other get better. Trainees are going to return the favor by doing just like a lot of the day-to-day shitty work and the more menial tasks. And so that was a big part. Focusing on the process improvement and focusing on the bobblehead. How can we improve our expected value each day? Another thing that was important is just not letting negativity seep in. I find that in trading world, negative attitudes can be so toxic where it's like if there's a shitty period and you get one person complaining, oh man, this market sucks, bro, like, oh, I'm down so much money, then like it just becomes this feedback loop of everybody nonstop bitching about how shitty the market is, which helps no one, right? Like all it does is make people like more miserable. And then it also just ruins your limiting beliefs, right? Like if you start saying, oh, there's no money in this market, everything sucks, then all of a sudden, like you're not looking for where the easy money is. You're not looking for how to expand your playbook. So a lot of what I did was like, one, we're going to collaborate. Two, we're going to focus on getting better. And three, we're just going to make it as positive and fun as possible so that people can keep on pushing during the slow times. So I think all that stuff was really, really important. And when you build a really good team dynamic, you can be so insanely effective. Like when we were operating as a really good team, you're helping each other spot for news. You're helping each other notice key things. You're like, especially on big panic days, you have so many different sets of eyes. And it just allows you to make decisions so much faster and more effective. Essentially, we had 10 brains working together rather than just one. Like we could have trainees checking different news sources or helping us, run math on something while we do whatever else. Like it just allows you to really like learn more. We were sharing catalysts. So like we would do catalyst game planning. We would do prepping for any big panic day. We would do, everybody in the office had a different role. Someone would summarize short reports. Someone would specialize in biotech catalysts and data. Someone would specialize in M&A summaries. So pretty much like the older people would pay for the news sources and spend all the money and teach the edge. The younger people would do the menial work and help save time for the older people. And everyone won. And we were just able to make faster, better decisions and ideally have more fun and be more resilient than the rest. So that's important. And that's also what I advocate for people finding trading pods. I know a lot of you guys were in Vegas, which was amazing, networking and everything else. So many people have come to me over the last couple of years and said, hey, Lance, your idea to form these trading pods has changed my career. Otherwise, trading is very lonely, and it is a way, way better thing to do with people getting better together. What approach did you take to get into the flow and manage stress/pressure each day? Again, I would just say like this comes back to focusing on the bobblehead and expected value each day. Like my sole job was to get better and it was just to execute. Like I did not put too much pressure on any given day. I did like it was just solely I'm there to get better each day. In the long run, this will work out as long as I truly believe in that mentality. Call it faith, but it's a powerful mindset when you do it. Okay. Guri, what was your approach to growing your account, or what approach would you recommend to someone with 10 or 20K account and grow onwards? any strategies that you've seen people use. How do I manage to execute so quickly and efficiently on overnight trading on IBKR? So, I mean, I guess I didn't need to grow an account per se, like by the nature of working prop, like, it just doesn't work that way. You just have a set amount of buying power that generally you get in more and more buying power, the better you do. To recommend to someone with 10K or 20K, I don't know if I have some great answer to this other than I'd largely be in demo. Like until I have edge, I would be in demo. I think people are too quick to lose real money that they need and put real capital at risk beforehand. Or what they don't do is they do not risk the minimum needed. There is nothing wrong with trading one share. The only thing wrong with trading one share is people's ego gets the best of them, and then they just end up spending, would you rather spend $500 on tuition or 50 grand or 500 grand? There are traders that have blown 500 grand or 100 grand or 50 grand that easily could have just learned the same amount for, $500 or 5K. There is nothing cool about blowing money for no reason. I don't think it's cool. So my gist of it would be build edge, be beforehand, I guess. And just try to give yourself the longest runway possible. Yeah, I think that's kind of it. I wouldn't, if I had some small account, I don't think I would be biased. Like I think so many people end up biased towards these like low float, low market cap stuff because they make large percentage moves. I think that's kind of dumb. Like it doesn't matter the percentage move. All that matters is the expected value. I would just be trying to find what are the best expected value plays, and not have any identity. I think a lot of the small cap trading on Twitter is exceptionally dumb. Not all of it. Like there's sometimes edge there, but I've never seen anything like it where the Twitter hive mind is so obsessed with low float trading. Then so many of them blow up on stuff like the DRUG, the TNON, and everything else. I don't get it. How did you manage to execute so quickly and efficiently on overnight trading? Overnight trading sucks. Like I don't think I was quick or efficient in any means. I think like I don't have any great answer. I was just the fastest turtle because I've been doing this for too long. But I'm the overnight platform sucks and it's super shitty and super inefficient and super cumbersome. So I don't have any good answer other than I'm just processing generally faster from doing this so long. But no, I deal with all the headaches you all deal with anyways. Rick, who we have on the call, which is always great to see you. More efficient morning prep. Start at 8 a.m., go through vital knowledge, and then personal scanner, where I look for more stocks with catalysts, 7 to 10 minutes on one stock, blah, blah, blah. Do you think I'm spending too much time on stock research? I think part of the rest, or should I go deeper on the technical and not too deep on understanding the news? I mean, it really depends the type of trader you are. Like some people want to really understand the news. I for the most part, I want to know the headline. I want to know the basics about it, but that's about it. I wouldn't say I spend, I mean, if it's a really big headline of that day, like I'll definitely be reading into it. Like that EVGO, I definitely probably would have read the full article. Like it's kind of just a feel thing over time, and that's going to differ for each person. And then how much the news matters to you. For me, overall, news tends to be fairly binary. Like I want to know the news. I want to know what might, be the next play because of the news, but ultimately I'm not trying to, run any models or do anything crazy. I don't think what you described sounds too deep or too over the top, as long as you're just doing it for probably the couple big news articles. And ultimately, yeah, it's just the question, my question for you would be, if you're spending time going deep on the news, what impact does it have for your trading? If you've got a good answer and it does affect your trading, great. For me, going super deep generally doesn't. Like with this EVGO, with this EVGO, like, yes, I want to know that this contract was huge, but beyond that, like, I don't need to know that much more than that. So then Roberto said you can use keywords for having a faster understanding of headlines and if the market is price sensitive to that. Yeah, I mean, I think once you start to see enough news, you also start to see how these things kind of move quick or not. Like the second you see the size of this contract and the market cap of the stock, you know that's just going to go. So I'd say you start to be able to filter this stuff better over time, but it's ultimately going to be individual. So then Stephen was asking about the August 5th panic. The price moves are far in the tails. I made the argument that volatility does not equal risk. I would just like to know how you personally played the FRCs and such, or if it was a no trade for you, especially from 3-9 to 313, as well as did you consider selling vol and how would you have expressed that trade through strike and date? And did you think it was simply too dangerous to overnight any of these tickers? So what Steven's really asking about is the Silicon Valley Bank crisis from 2 years ago. Maybe it was more than that already. Was it 3 years ago? Here it is. 23. So just, yeah, a year and a half ago. And so a lot of the Silicon Valley banking crisis, I actually was not able to take advantage of. This all overlapped, at least the really craziness, not this day, but these days overlapped with an impact competition at the University of Houston. So it was pretty funny where like I was aware of what happened this day when it was because of the Silicon Valley Bank, the CivB or whatever. But then most of these 2 days, I was either in this competition or on a plane. So I didn't do anything much during that, which kind of sucked. And actually, coincidentally, I due to one of the business ventures I do, I actually had a large amount of capital at Silicon Valley Bank for something. So that was actually an extremely shitty time period for me. Yeah, I was mostly worried of, am I going to lose my actual money at the bank? And then was just doing nonprofit work. So not good trading time for me. But would I consider selling vol? So this was definitely pretty dangerous because these are moving on real news. This is not like, the oil stuff is real news too, but this was news that I don't really have a good sense of how to handicap. Like, I don't have some ability in this sector to know what banks were going to be solvent and what weren't, whereas I do feel like I have an edge in the oil market. So I would have been very scared to sell vol on some of this stuff. I mean, even if you sold it this day, you could have got epic blown out. The other thing too is some of these banks were just being taken into receivership with pretty much little to no warning. So pretty much any of this stuff could have just been a zero magically. Did I think it was simply too dangerous to overnight any of these tickers? Now, that is an important question. Is it simply too dangerous to overnight any of these tickers? And this came up a ton when dissecting WAL this day, because some people were too scared to even trade these. The important part, though, is are you being compensated for the risk? I don't mind taking a total zero. I don't mind losing 100% of the share price if the expected value is way, way, way more than that. So if you're buying WAL at $10 or $12 or whatever, again, and this is total hindsight, right? But I don't mind buying at $10 and losing 100% of it if I might be able to make 4x with decent odds. And again, that's hindsight. I'm just using that for an example. But the point is like, it's not is it simply too dangerous? The question shouldn't be too dangerous. It's, did I view it as negative expected value? Overnighting stuff. That's a different question. No such thing as too dangerous if I'm being compensated. Then it just becomes for sizing, right? I don't want to, if this can be a zero overnight, I don't want 100% of my account in this. But if this is a really, really good trade, which this was intraday, I'm not going to be afraid to bet some amount. Definitely not a huge amount of capital because this definitely could have been halted. I don't want to, be all in, but it's really, does the expected value of this trade justify the halt risk. And the reality, though, is when things are really, 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 really panicking and things are peak scary, a lot of the times you might be compensated for that. So the same way that when this was like melting this day and it went to $10 and $7, $8, I would argue you were compensated the same way that it's not in oil. It's not that this couldn't have exploded to $90, right? Like Israel could have struck and sent oil to the moon. That definitely was a possibility. But when oil had gone 10 points, I felt like I was very much compensated for that risk. Again, then it becomes a sizing thing. So I would say it's not too dangerous. It's about expected value. So then there was another. Okay, so now I need to jump to. So AG, and this is kind of an important question. So AG asked, Amazon on 10-9 killed my PNL. I'd buy the breakout and get stopped, did it 5 times. So as a general rule, like if something isn't, oops, I typed up AG instead of Amazon. Generally, I'm never gonna pretty much do a trade 5 times. Like for the most part, if a trade doesn't work, usually the expected value on it is getting worse and worse. Let me see what day this was. So we're talking 10-9. I don't even necessarily know if I would be even trading Amazon at all on this day, which might be kind of my first issue for some. 10-9. Oh. -9. Yeah, so and I guess like my question would be like, I don't know what breakout we're buying. Like nothing on this chart is a good enough setup for me. Yes, we're trending higher. Like I do like that we're making, you know, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. But if I'm buying these like essentially I just wouldn't be buying these breakouts. I would not be buying this breakout. Like this ticker, one, it isn't in play enough for me, and two, these setups aren't good enough for me to begin with. And so I would say like the first question is like, should we even be trading this? And two, like in general, I'm probably almost never trying a setup 5 times. Most times things are getting worse, not better. Similar question is, or I guess another question was, how do you interpret volume on the time and sale going between the bid and ask, the dark pools that show up on DExchange? So I just view it as anything else. I don't overly interpret it. If something's closer to the bid, I view that as kind of more bearish. If something's closer to the ask, I view that as more bullish. But overall, yeah, there's tons of dark liquidity. I use a ton of dark liquidity. I'm sure IBKR still routes some of my stuff to dark liquidity. So I would just view it as any other print, but I would interpret it based on where within the spread it's going. So if the spread is 1020 by 1050 and the prints are going off at 1021, that's way more bearish than a print going off at 1049. So Otabek, I'm sorry if I didn't pronounce that right. Hey Lance, a question about Chinese plays recently. I was shorting Tiger. Shorting Tiger. Oh, so this Tiger I'll talk about. I mean, this is definitely going to be in one of the top ops also. Shorting Tiger, didn't size up on it. Oh, so this was 10-7 this day. It didn't size up on pre-market, waiting for a move up from the intraday, from the open or intraday capitulation. So as you can see, there's no move up, blah, blah, blah. My question is, assuming capitulation didn't happen or pre-market, how do you approach those plays? Do you always wait for capitulation after open? Or maybe you take small size. So how do I approach this? So for context, obviously Tiger had just been absolutely exploding. So I thought this day was like incredible opportunity. But I'm gonna get to the root of what Otabek is asking, which is what happens when it doesn't set up that well. So this was on 10-7. 10. -7. And so, definitely just keep in mind that daily chart, just so I don't need to go back and forth referencing it. But obviously, this was very capitulatory. The volume on this day was absolutely insane and a massive move, right? Because we went from $4, even this move to 8. Like I was short a shit ton this day, and I probably broke even. Then we essentially more than doubled that move. So this was a ludicrous move. Oopsies. Okay. So what Otabek, again, I'm sorry, was asking is like, look, this didn't really capitulate to the upside like Futu did that other day. He had started to size pre-market, but then if you added off the open, you ended up getting stopped out. And so then he's asking like, Lance, how do you navigate this where you don't really get a setup? Or at least what's not so great of an intraday setup, at least for me. And so what I would say is like, overall, I agree with this sentiment. And I think a lot of people struggle with this. And so in general, nothing forces you to play if you do not have a setup for your system. Like if things don't set up very, very well, I don't feel the need to play that. Hold on, I got a minimum. Oops, why is this? I've got a bar blocking. Hold on. Can you guys see my struggle right now with the screen share that I can't get to the zoom out? I don't know if you, because I have a toolbar on my computer that's hiding it. I gotta.
No, we can't see that.
Yeah, one sec. I gotta fix my toolbar. Shit, I don't know. I don't know if there's another way I can get around this, but my toolbar is not minimizing.
I think if
Auto
you
zoom?
just control and then minus could zoom out.
Oh, Neil, you lifesaver. That's why I have you on here. Thanks, brother.
Got you.
Yeah, thanks, man. That saved me actually. It's funny because like I have a Zoom pop-up that won't close, so it just won't minimize. But anywho, so this is a really important question, and I'd say like nothing forces you to play if you don't have a setup, and then ultimately when you like in an ideal world, I agree with what he's saying, which is that I do want this to capitulate to the upside ideally, and that for me would be an A plus. And so this came up a lot even on the NKD day, where a lot of traders trading the American markets were hoping there would be a big flush out in Apple, Nvidia, NASDAQ, whatever. And what do you do when that flush out doesn't happen? And so that's where you need some other subsets of how to trade this. And one other subset, he was asking like, do you have a defined trading pattern? How do you approach these stocks? In an ideal world, I would love if we get some type of pattern where we get some type of support and we kind of bouncy ball, then break that support. Or if we at least try to make a move, we kind of roll over. Like if you think about SMCI on its top day or NVIDIA on many of its top days, those were kind of like a nice rollover pattern where it didn't really capitulate, but it still melted. So I think over time, what you want to do is build this playbook of different ways to capture these moves. And I would agree with the premise that overall, like I wanted some exposure. This I did trade. So I did want some exposure. So I shorted some pre-market, but then there really wasn't any great setup for me. And so because there wasn't a crazy good intraday setup, I really wasn't trading this with equity. And what I did do instead was I sold a shit ton of options on this day of calls. And so this was something where like, and again, you need to be careful. Like, again, this is not trading advice, yada, yada, yada. Like you need to build up your own risk tolerances, everything else. Options are complicated. But because this wasn't so setting up so much, but because this move was so crazy big on that daily chart, my confidence that this would be the day that we would kind of collapse was very, very, very high. And so the options also were incredibly, incredibly pricey. So the way I think about it, like some of these options were going for like, I don't know, like $2-3, even just like a couple weeks out. And the way I think about that is like, if I can get $3 for some of these calls that were like, I don't know, the strike was like 16 or 18, like it was crazy for some of them. If I can get like a couple bucks for that, like the odds of me making a very clean $2 to $3, like I definitely could have chopped myself up in this. So I felt that the options offered me the ability to still make 20% of like the share price. Essentially, I was able to catch that $2 move just by selling a call, which I felt had a way higher probability. So because I was pretty confident this was going to be the day, and because the vol was so crazy expensive, and because if we went meaningfully higher, like I would not have minded being short. I mean, look where the stock is now. The stock's at like $8 or $7 or something. Like I felt that if I ended up getting short at like 16, 18, $20 or so, the odds of me making at least like 30, 40, 50% on that was so incredibly high because that move, this was the craziest move out of all of them. So again, I agree with that premise. I only had small size. Like I think I shorted like 50 or something, which is not that crazy for me. Now, yeah, keep in mind when this was at $8, I shorted 1 million of them, given I was with the tight intraday stop and everything. But so for me to short 50K of these is not that crazy. That's a very starter size position for me that I was just going to hold loose because I wanted to set up otherwise. And so I agree with the whole premise, but for me, that's where I was willing to sell premium on this specific day. So I agree with everything you're saying. And I think you just need to be okay where it's like, hey, this didn't set up for me. Like in equity world, all I had was my little starter size. That's all I caught this for. I mean, I ended up holding this for days, fortunately. But that was it. The only other thing that I would say is kind of interesting is because the vol was so expensive these days, the puts were like out of their mind. I mean, I think everyone knew this was gonna kind of crack, but like, what day was this? This was 10-7. Like, you could have sold those 10-18 puts, depending on the strike, for like a good couple bucks as well. And so what I did is, as this started to crack, like those puts were so crazy expensive. So then I ended up selling a put against my short. And so essentially, like, let's say I was short 50K from like 14 or something. As this started to crack, I think I sold like a $13 put, so that in general, my plan was like, overall, that put is probably going to be exercised and take me out, but that gave me so much cushion. So that's another thing you can think about. And so essentially on 10-18, which was Friday, the stock was so much lower, the put gets exercised. And yeah, I ended up not making probably the maximum amount of profit because we pulled back so much, but that definitely increased my probability of getting some type of win. So when vol's super jacked like this, if there isn't an amazing setup, it's just kind of another way to think about some of this stuff where I do tend to go into options. Oh, and Steven even mentioned in his side question about the NVIDIA rollover on the semi-top day. Yeah, where I totally agree with that. Does that all make sense for this one? Good, thumbs up. Yep. And but yeah, in general, if there was a really good intraday setup, like an SMCI rollover, like an NVIDIA rollover, like a bouncy ball setup, that's where I'm definitely attacking the hell out of this. Or if it just capitulates to the upside and then we crack. Nick asked, how can I improve my tape reading skills? Every day I'll record the tape and play back to learn the tape. I still don't know what should I find in the tape, and I feel a little bit lost when I'm looking at it. Can I give you some advice? My best answer for this, the tape is notoriously hard to explain. Oh boy. My voice is going already, but the tape is notoriously hard to explain without visuals. So this is a subject I've kind of regularly sidestepped, and the short answer is I'm going to continue to sidestep it because for the magnum opus, I'm going to have free videos on this. So stay tuned. Like I can't really explain it well without visuals and proper videotape of some of this stuff. Like it's just way easier to do that way. And the reason why I've sidestepped this to begin with is because collecting some of that video stuff is super time intensive. So my short answer is this is something I plan on tackling appropriately. and I'm going to do it well. And I'd rather do it well than not well with no visuals. It's just not going to be that effective. But this is a hard topic to tackle because of that, because I need to collect the video. So stay tuned there. Sorry. Gonzalo, I live in Manila right now, plus 12 hours. Yeah, that's not fun. Have family, kids, makes it a challenge to trade US regular trading hours. What would your approach be to trading my situation? I'm experienced, but not consistently profitable. Slowly shifting to a more swing trading. Appreciate your thoughts. I mean, this is hard. Like I can't really speak to what's right for any given individual. I know a lot of people in Australia. We met people at the Patreon meetup that do the US hours. It comes with a massive sacrifice. It comes with a social sacrifice. It comes with a health sacrifice. When you have a wife and kids, or family and kids, that also comes with a sacrifice. So I don't have the right answer. I do think that the opportunities in the US markets far exceed the opportunities in the rest of the world. Overall, over the course of a year, like the US markets in equity world are the place to be. But yeah, it's really tough. So I think everyone needs to find their own right. Like I can't speak to how that can affect your family, your health, everything else. It's tough, but then I would just try and find like, okay, are there any ways to mitigate it? Like maybe it's something where you say, okay, in general, I'm going to just trade, call it pre-market to 11 a.m. or something. Versus doing like the whole session. Are there any safeguards or constraints? The other thing that I think is also interesting is you can build your skill set, then only trade the overnight on exceptional days. So I do know there's a lot of Australians that will kind of trade Asian markets and Australian markets. But then if things are going crazy in the US, they have access and the setup and the familiarity to trade the US markets when it's really good. So there's a lot of Australian traders that will trade it when it's amazing, but will otherwise live their life that like they need to live it on their time zone. And I think that's probably the right balance. There's very talented traders like James Chen, who's done Chat with Traders and other stuff. He does international ARB. So he wakes up multiple times throughout the night, and that is his life. That is not something I would choose given my value set. So I think if it were me, I would probably be trading Asia/Australia and then make the sacrifice on, I don't know, call it the 5 to 10 days a year needed to trade US, but I can't speak for anyone else. That's just me. Felix asked, I have several tickers I trade and I know well. I can have a fairly good grasp on how the news will impact the ticker, but when it comes to tickers I'm not familiar with, I have to check out all the context, the higher timeframes, and understand the news. It takes me quite some time. You literally trade everything. Do you suggest that this level of understanding come from collecting samples and following up everything for a long time? Do you have some nice process on how to do this? So I would say essentially, like, I do think day traders can make a 95% accurate decision in like 5% of the time. Most headlines, like I don't need to be an analyst. When I see that EVgo headline, I just know buy. When I see the Intel headline, I just know buy. Whether it's the Qualcomm one or the government contract one, I just know buy. When I see the SMCI Justice Department headline, I just know short. So a lot of the time, like, I don't think you need a ton of granularity to know whether a headline is good or bad. Most day traders are just making the quickest, fastest decision, because ultimately, like, that quick, fast decision tends to be very, very accurate most of the time. Like if the news headline was, so-and-so received a contract for 2.97 times pi e, squared divided by 973. No one can make some super, super quick decision, but most headlines are very just bite-sized, digestible things. So like me as a trader, I personally don't generally need the context. If it's a big M&A headline, I might eventually get to it, but I'm just trying to be the fastest, relatively precise trader I can. And a lot of the times, um, your basic read of it is going to be right. So that's what allows me to jump everywhere, and do all this stuff. You know, if some company gets a takeover offer or is exploring a sale, that's a buy. That's all I need to know. I don't need to know all the details. Will I, in 1 out of 20 times, get wrong and there's something missing? Sure, and that's fine. But if I wait to understand all the details, all this stuff tends to be gone. Stan is asking, and we're getting towards the bottom of these. Actually, we're very close to the bottom. Then I'll open it up soon. Stan, who we also have on, is how do you handle breaking news? And it's funny because this actually just kind of came up. Do you immediately look at the daily chart for levels or enter first? I assume you start taking profits at key levels. Do you scale? Okay, so that was the first question. So no, I'm not looking at any levels. I am just trying to make the absolute quickest decision. I do not care about what almost anything looks like. I'm just trying to, if this headline's big, I'm trying to act on it because a lot of those levels will be irrelevant in the face of breaking news. So I do not want to delay. Like, I don't care what the support is in SMCI. When they're being investigated by the Justice Department, yeah, I don't care about any level. That stock's just going to melt. And if I start caring about levels and looking and processing, I'm too slow. So no, I'm not looking at anything. The other part was, do you scale out of capitulation / mean? Oh, then as far as profit taking, like generally I'm just using my simple system of prior bar lows are highs. Same for capitulation and mean reversion. So I would say most of the time, I'm almost always using the simple prior bar lows. You asked for, please give examples when you'd scale and when you'd close the trade in one piece. So again, most of the time I'm doing one piece. The only time that might be different is if things start to capitulate in my favor. I'm usually scaling out intrabar. Or if things have really, really retraced a ton, I'm also not going to wait. So an example of that is this Apple. On Apple, I was buying this day. I also discussed in this day that I also bought, because even by here we had retraced a huge chunk of this overall move. I was scaling out on these days. I held probably virtually nothing towards the true prior bar lows just because we were so far off the lows at this point. Yeah, and in retrospect, that looks a little bit different. So let's see. I also think, Stan, as if you go back historically, I know you're a little bit newer to the Patreon. If you go back historically to, I have this video. It's called, like, from the very beginning, like intrabar versus waiting for the turn. And I dissects this exact question on the ticker LYV. I also think as you go through some of the top opportunity videos, you'll kind of get a feel for that. I mostly am just using the system. But the exceptions are when we just bounce back too much intra-bar, and I don't want to give it all the way back to prior bar lows. Let me see. Lewis asked my biggest L. It was a couple million. And then Roberto, thank you for providing that link. You know, that actually, when I lost a couple million, it actually wasn't that big of a deal. It was kind of towards the end of my career anyways. The worst losses were by far towards the beginning of my career, because those losses have such a bigger risk to my future. You know, if I were to lose some insane number now, like, the truth is it just would not affect my life. But there were losses very early on where you're like, oh my God, am I going to make this? My most dangerous loss by far was probably when I was short Allergan into this hostile takeover. I think that was like 2014. Just because that definitely had the potential to end my career. Fortunately, it was right as I was really taking off. So there was a lot of doubt and uncertainty, but then my mindset was just like, hey man, I gotta just keep on just busting ass and the chips fall where they may. But it was holes are most scary towards the beginning of your career because you have no safety net, you have no cushion, and it can just take you out. You know, you don't have a track record yet. So those were the way worse ones. So then Stan also asked Lance, approximately what percentage of your trades when you were active were scalps? That's a good question. It's hard for me to say because it would kind of depend the market and everything else. Because scalps were so small, generally, like no one's making 100 grand in a scalp. At least I don't think so. Most of my scalps were $1,000, 2,000, 3, 5, 10, $500. So the frequency of them was quite high. Like, so if I had to take a guess, maybe the frequency was maybe 30 to 40% of my trades by just pure number. But in terms of P&L, the scalps were a pretty low percentage of my P&L. I would assume scalps were maybe like 5% of my P&L. That being said, in slower markets, hey, that pays the bills. That helps give you cushion to bet more when you do get a really good hand. So I definitely did a ton of, in share terms, it was definitely a ton of my trading being in and out. Like I would guess in terms of shares traded, it was probably like 60% of my shares traded, just because there's so many times where I'm just catching 5 cents, 10 cents, 15 cents, but not a huge source of P&L. Okay, let me see some of these. So AG was saying he's struggling with right side of the V for reversals, especially at the open. Stocks with no news. I'll usually get hit. I think it's not true capitulation. Hood 10-8-24. God, my voice is starting to really hurt. 10-8. So big picture, this stock was breaking out. So, I mean, so this is, I'm going to do the old Neil trick, control minus. Thank you, Neil, for saving my ass. So one thing real quick. So I've not properly prepped this question. So, which is going to be good. So he's talking about this 10-8 bar. I have not looked at what this bar is. And the fact he's asking me a mean reversion question. If I had to take a guess, like this daily chart, this is a really strong breakout setup. We're holding the moving average. We're breaking above $24. We're even breaking above kind of this big picture $25. So if I had to guess, and again, I've not seen this intraday yet, I would assume this stock made a strong move off the open. And daily chart wise, this is not something I'd want to be reverting too quickly regardless. So now let me see what this actually looks like. And I could be just totally wrong and talking totally irrelevant things, but I'm just curious. That's just my first hunch when I see that chart. Okay. Yeah. And so, that's literally pretty much what it was. And so in general, there's a couple things that are the issue with this. Like one, the second I saw that daily chart, I knew, hey, this is a super bullish daily. Two, these bars aren't getting bigger. This bar is the biggest, then it gets, slightly smaller, slightly smaller, slightly smaller, much smaller. Then the volume is also not capitulating. So I think as you database some of this, you might even want to go back on Twitter. I was doing like almost like these 60-second TikTok videos. And I probably have like 5 or 10 examples, but in the best examples, it's the inverse of this. The bars start small, then really capitulate, and you get the volume capitulation. So this did not have volume capitulation. The bars are getting smaller, and the daily was very bullish. So all of those would make this a just total no trade for me. So those nuances matter. Those nuances matter a lot. And I have some past examples. If you Google, Twitter, the one Lance B 60, I think I called them like 60-second dissected something, or I don't know. You'll find them if you search hard enough. But I probably go like through at least like 5 of these that were interesting to me and why. But those are the issues in that hood. So those are basic rules of thumb. I want acceleration in rate of change, not deceleration, and I want increasing volume, and I want You know, again, this was a bullish daily setup to begin with for the reasons I discussed. So, you know, this is just a strong stock breaking out, and it had strong volume, but not capitulatory volume. So all that is scary to me. Samir, do you ever take positions? Okay, so this was actually a really interesting question from Samir. Do you take do you take positions before a key event like the Chinese NRDC briefing? I have heard you speak about EV on an intraday basis, but can we think about an event EV? So essentially he's asking, like, would I ever take a position into an event? In which then my quick reply to him was yes. I'd argue that's largely what I did by shorting oil vol. So essentially, with my knowledge of the oil market, I felt that when this oil was up $10, it was way pricing in way too much, and that peak fears were kind of already priced in. Similarly, like when FXI, like this stuff was going so far into these events, like did the Chinese, like nothing ever goes in a straight line and nothing ever changes overnight. I wouldn't say nothing, but I would say it's quite rare. And for the whole Chinese economy and everyone to wake up and all of a sudden be mega bullish, like we were getting super far in the tooth. So would I ever consider positioning short into some of this stuff or positioning into these events? Like absolutely. But what I would also say is sometimes you don't need to position into the event and you can just trade the event. Like I think the way safer thing would have been to just actually trade futures on the event. And then once we fail to go and we start to cross over, like, you know, for example, if you were to have shorted, say 36 here or whatever, I'd much rather almost do that than just blindly position into an event. But the answer is yes. I do think things can get so priced in that it's like, hey, unless they totally blow it out of the park, this is gonna crack. So I do think that tends to happen quite a bit where you can position for this stuff. Did I yeah, I wish tea with honey, I wish. I'm sadly my shitty hotel room right now will not magically conjure that up. It is funny though, like my voice tends to go pretty easily, which is always a struggle at Traders for a Cause. Well, I don't know. It's also hours of speaking. Lewis asked, do I have any long-term holdings? Absolutely. I think the smartest thing most people can do is just long-term passively index in the S&P 500. So I mean, yes, I have tons of long-term holdings. I have diversified assets of all types, but the bulk of what I do, especially now, and what I'll continue to do more and more of, is just passively invest in indices. I'll probably, before the end of this, talk more about my decision. I know this is of much controversy, but I do truly say this time that I do plan on no longer trading, or at least taking a break for real. So I probably, I might as well just get into it now. But so many know that I've many times said, okay, I'm done trading. And for the most part, the last couple years, I didn't trade that much. Like 2022, I had a decent year. 2023, I didn't do that much. Just not even just in P&L terms, but I just wasn't trading that much, nor do I think was anything that crazy. Obviously, 2024 was super active this year. And as a result of that, I ended up trading quite a bit this year. I mean, I was a maniac for a couple periods of time. Not that I was ever trading day to day, but that does mean I was constantly watching the market. And the hard part about this year was so much of what happened at the absolute worst time ever. Like when I was in Japan was when SMCI happened, which is the exact opposite time zone. You know, I think it's like 12 hours ahead roughly. So that was like staying up all night and then you're jet lagged anyways. So that was super bad for my health. And it like definitely somewhat ruined half of my Japan trip. I've also filmed now 4 times for Magnum Opus. Every single time I had to film for Magnum Opus, something was going on in the markets and I was trading it. So when I did the trailer for Magnum Opus, that was in New York City when the GME AMC stuff was going on. And I actually had a personal emergency in the midst, which was just like awfully timed. And so I still ended up with like all this exposure trading when I was going through something very difficult personally. Um, and it just adds so much to the stress level. Then even on the other times between the August 5th panic, I was filming in LA that week. So I had to go from pretty much 2 days of no sleep to then film for this stuff where I know I met some of you guys in LA. Like when I do this filming, these are like 12-hour days where like you're waking up, you're reading scripts, you're going to film after I'm reading more scripts. And like it's one of those things where it's like, Lance, like if you care about health and stress and quality of life, like why are you doing this to yourself? Yes, the money's great, but like the cost in just stress and most of all lacking presence is super, super massive to me. I've had that, then like the China stuff was another thing where all that stuff is going on in the overnight session. Most of my trading this year was in overnight, early pre-market, or even after hours, which is super, super brutal for me. And the other things I try to do, between the course, between the nonprofit work, between just being healthy, and fit and the stuff I really care about, that's super, super tough. Then of course, I was trading the China, I was trading the oil stuff. So then with the oil stuff, you're short oil vol in the middle of like what might be, a whole war in the Middle East. And so every single night you're not sleeping well when if something really crazy blew off in the Middle East, I would have been short so much oil. And like you can't sleep like that. Like that's like even for like I'd be playing pickleball with my friends and I would just have my phone on me. And in between every couple points, I would just be checking to make sure like nothing super crazy popped off. Every morning at 3 a.m., 5 a.m., I'd be checking to make sure nothing popped off. So the cost of life from some of that is pretty high. I've generally justified it because one, I've got the skill set and I tend to donate, a lot of the proceeds to just do good things. But at the end of the day, so truth be told, and I will get this audited, or at least I'm trying to. It's not getting stuff audited isn't as easy as it seems, but I am trying to get some type of third-party verification. But I did have a record P&L year, and it also it actually sucked for me every single moment of it. Like that resulted in me being tired, miserable, like unhappy, unhealthy, like getting sick. So yeah, it's and HCP said, the interesting part of, take care of yourself so that you can take care of others. And what I would say is like, you only get one life. A lot of my family has died young. And like, you can't undo a lot of that damage. And it's like, once you make a certain amount of money, like I get so much more enjoyment, like giving back to you guys, doing my nonprofit stuff, getting outside. Like if I'm not having fun doing it and I don't feel good doing it, you need to just draw the line where it's like, hey, Lance, like what's the point? Is it really worth the money? And there's other ways to make money. If I want to give back, like anytime I'm trading, it takes away from magnum opus. It takes away from doing events like this. It takes away from friends. So long story short, that's what's kind of led to all this. And Tara, and again, sorry if it's Tara, these things are always confusing to me. Health first trading balance. So one thing is like, in theory, you can kind of create rules around this, but like the hard part is like the big money ops really did come at shitty times this year. Most of it was overnight trading, or pre-market or whatever else. And I could say, oh, Lance, like just trade small then. But it's like I don't particularly enjoy it. So why, like trading small kind of just defeats the purpose itself to me. And like at no point do I really want to just be sitting in front of my computer doing this all day anymore, which is a lot of the reason why I left Trillium to begin with. So like minus the money aspect and like some weird dopamine, I do think there really is a dopamine addiction factor where it's like, oh, I got my voice. Where there's something about the market where there's so much uncertainty involved. Like what makes like TikTok so addicting is you don't know whether that next video is going to be good or not. And 1 out of 10 videos, 1 out of 20 videos is awesome. And you're like, oh my God, that's so great. So you keep mindlessly scrolling, trying to get that dopamine hit of like, oh my God, that video was great. And the reality is, yes, that video is great, but the other 20 don't, and you just lose so much time to it. but it's addicting. And I think the market, there's something there where it's like you're kind of predicting what you think will happen, and there's this uncertainty, and you're like, oh man, is oil actually going to pare back? Is my view of the world right? And I think that makes it very powerful where you want to see your view enacted upon. Not that I think this is any like true addiction issue, but like when I do trade, I ask myself, like, Lance, like, why are you doing this? You know, and like I've worked on this with Dr. Katz, my psychologist, and you know, the first step is you in the moment you want to identify what are you feeling in that moment. And there's times where I'm doing these trades and I'm thinking like, man, there's literally no reason why I'm doing this other than, you know, I think I know where this is gonna happen and I'll make money off of it. Like, it's not, oh my God, I'm enjoying this, or oh my God, like this is fun, I have this state of flow, or anything else. It's like this, oh shit, I can't believe I'm doing this again, but I think, you know, this is my view of the world. And it's like, it's just not really a need I need itched, which is a long way of saying, in theory, not even in theory, like I've already taken the steps, like my account will be closed at least in the next week or two for the next couple months. And at least to take a break and see, like, Lance, like, do you miss this? Like, you know, is this the path you want to go? So I will see, but that is a long-winded way of, I do think I'm going to try to at least take a 2-month break and reassess. And I do think overall, despite doing well, which again, I will verify so people don't know I'm a massive fraud, like, or not know, but, you know, to prove that I'm not, like, yeah, I don't know. It's not been what I wanted to do otherwise. So long-winded way, but I think I'll probably wind down. We'll see how it goes. Anywho, Guri asked, did you trade any of the overnight Chinese markets or futures? No, I didn't. You know, that was already at the point where I didn't even want to be trading anymore anyways, because it was so much overnight stuff. So I do think there was cool opportunities that day in the China stuff. But it's like, at what point am I just going to keep on getting super shitty sleep and justifying it? The other thing too that I might add to all this is I think for the average person, it's very hard to imagine the intensity I went at during my career at Trillium. Like, I don't think my routine was probably that different from any like top level professional athlete. Like, if you were to take the daily routine of, you know, LeBron, Steph Curry, whoever, or like a pro baseball player, golfer, football player, like the level of obsession and that I needed to achieve the things I did, like I was so insanely good, but I was putting so much effort in. And like, unlike those athletes who are doing a physical task, like I think stress and cortisol, not even I think, this is pretty much just scientific literature, but like stress and cortisol and adrenaline are totally okay when you're moving around and active. Like fight or flight, you're supposed to be moving. You're not supposed to have fight or flight and be totally sedentary. And you're not supposed to be on August 5th up all night trading, lying in bed and just totally, like, I'm sweating, you know, because I was essentially max BP. I'm just lying in bed trading and I'm just sweating, you know, and you're just like, what the fuck? And at least those guys are doing a physical activity that is very, very protective of their health, minus, you know, CTE for football and everything else. But those guys are doing, they're running around, they're outside, they're active. That's way more better than the routine I had where I was working so many hours, so sedentary and so inside. You know, during most of COVID, that was like the Super Bowl. The average day during COVID, I would wake up, immediately run to my computer and just literally not leave my little desk for, like, you know, I was trading probably 5 a.m. Chicago until 7 a.m. Chicago. I'd eat dinner and you'd repeat. And that's, I was clocking like 200 steps a day. That's not good. Tara asked, is day trading a young person's game? I mean, I do think trading is easier when you're younger. Because I think to be exceptional at anything, you do need to have a very high level of commitment and effort. And I think most people, before you're married, before you have kids, When you're 23, you don't have that many responsibilities where you can be fully committed to getting good at your craft. I do think as you get older, like it's not that, LeBron, Steph Curry, all those guys have kids and a family. It's not that you can't do that stuff, but they've already built that foundation and there's still, there's still trade-offs. So I don't think it needs, like, you can be good at any level, but I think especially early on, to really hop up on that learning curve, you really need to put a lot of time in. And I don't think it's necessarily like I know so many traders that are really great traders at older ages. Like there's people at Trillium, SMB that are, not old per se, but not young. I do think over time you need to adapt it to make it work with your life. And I think also though, there's a lot of pros of trading though too. One sec. There's a lot of people that because of trading, they're able to pick their kids up from school. There's a lot of people that because of trading, they're able to have a roof over their head and food on the table. So like trading is life-changing for many, many people. But I think it's just really just keeping it the right balance for you. And yes, early on, you need to be super gung-ho. And I think you need to adapt that over your life as your life changes. And I think that happens naturally, right? Like when you're 23, you can say, oh my God, I want to become the best at this and I want to obsess over this. Like at Traders for a Cause, there was one young dude, really, really good trader. And this guy was just obsessed with trading. And like, that's great. But guess what? If you're in your 30s or 40s and you have kids, you're not going to have that. Most people won't have that same obsession. I'm reading this HCP comment. Yeah, and it's funny too because like ultimately humans are just not totally oh, thanks, Helen. Ultimately humans are not fully rational beings at the end of the day. Like we are very emotional and sometimes illogical, but and even Kat says the same thing. Like there's always some type of reason why we do things, even if it's not apparent to us. And a lot of the times we want to figure out what are those triggers, what sucks us in and everything else. And a lot of times, and so Katz is potentially going to end up doing some videos for Magnum Opus. And one of the things that I think is so important is like, he'll often ask the question of like, what need is this serving? And you might think whether it's like rage trading or FOMO or this or that, you might think a lot of the things we do don't have reasons, but inevitably like the human brain isn't dumb. If we're doing something, there's some deep down reason for it. And sometimes it takes a lot of just discovery and self-analysis to find out. That's a long-winded rant. So I'm done with all the questions online. Let's start to open this up to the other stuff. Rajan asked, can you touch on your daily routine? You were earlier in your career. Specifically, what were some of the things that you did that your peers didn't do? I mean, I think one of and so there's some video online, I think. Let me see if I can find it real quick. YouTube. I did do my daily routine before. In video format. I don't think necessarily, oh, I found it. 1 second. To everyone. That link has my daily routine. I don't think I necessarily did anything that like a lot of people would tend to avoid the hard, uncomfortable work. A lot of people would tend to, when they had a bad day, they would fall victim to the psychological gain. And so they would associate bad day equals frustration equals pain equals I'm going to leave early. Reviewing my worst trade or my losses or what I missed equals reviewing my failure and looking them in the eye equals emotionally uncomfortable. So there's a lot of the things that so often the most important work is also the most uncomfortable work and the stuff we tend to just naturally avoid. And I think I was just very good at just kind of moving into that discomfort and saying like, okay, I messed up. I'm going to find out exactly what I did wrong. I'm not going to let that happen again. Okay, I missed this trade. I'm going to not let that happen again and figure out every solution. So I think so often a lot of what I did was I worked harder, I worked smarter, and I was not unwilling to do the difficult emotional work. And a lot of that was like I just had this competitive chip on my shoulder where it's like whatever this takes, I'm going to outwork and pain whoever else is in this arena with me. And it sounds silly, but that got me a far way. Tara asks, I do not like to trade stocks less than $10, but now I realize that I'm missing opportunities. How do I get over this mental block? I mean, in general, I just try not to have any identity to begin with. So the question is like, why does that even begin? Like, I'd say the best way to do it is force yourself every day, even if it's just for one share or if it's in demo. You need to just build that muscle and just break down that limiting belief. So like, even if it just means, okay, for one share each day, sorry, my voice is going. I would just be trading stuff that is over $10. Do not allow yourself to go a day not trading something more than $10. And if for some reason $100 really scares you, even for one share, start at $11, $12, $13. But I would just not if this is important to you, which it probably is, because you shouldn't have a limiting belief like that. I would just really start either at $11, $12, $13 for one share, and never let a day go by without getting reps on that. A lot of this stuff is just reps to break down those barriers. What else you guys have for me?
Yes, sir. I have one. You consider coachability as the ultimate trait for a trader. As a coach and leader of dozens of traders, what other traits do you think influence positively a trader's probability of success?
And one thing, Tara, real quick, is like, maybe that even means setting an alarm. Like you can set an alarm for 2 p.m. each day. And again, you don't want to just waste money for no reason, but like even set an alarm for 2 p.m. and it's just like, look, if I haven't traded a ticker above $10 between 10 to 4, you can't let that day elapse. Do not let a single day elapse without breaking that limiting belief. And again, that does not mean burn money. This can be for one share, it can be for 0.1 shares, it can be in demo, but do not let a day go by not advancing on that goal. So then Roberto asked, so I've said before in some places that coachability is super important. And coachability, I would mostly say, is the ability to receive and incorporate feedback. Roberto is also asking, like, what traits beyond that do I think are important? It's kind of hard because there's so many different ways to become a good trader. I think inevitably you need to have attention to detail. You need to have a passion for the markets, or at least some type of drive. You need some type of powerful why. Like it doesn't matter. You can be coachable, but if you just don't give a shit about succeeding at this, like it doesn't matter. Like I think I'd say I think I'm fairly coachable, but that doesn't mean I'm going to get good at, backgammon, because I just don't care about backgammon. So you need some type of why and motivation combined with coachability. I do think there's some level of analytical intelligence you need. Like if you can't understand expected value and stuff, you're probably going to be somewhat limited. If you can't really understand some of the poker analogies and stuff, oh boy, it's really not going to get you so far. So I don't want to cookie cutter it because there's just so many different ways to succeed and so many different traits, but those all stand out to me. Let me see. So Mattia asked a dumb question. Can you recommend how to spot new edge in the market for someone that doesn't like using data-driven approach? Yeah, I mean, my first thing would just be reverse engineering. Let me see if I can find my video on this. And some of this stuff is going to be in the course. I think I think this is the video, but you might be able to look for it if it's not. But long story short, I think the best way is to just reverse engineer the biggest, best moves in the market. Find the stocks that people are talking about online. Find the stocks doing the crazy stuff. You know, like you could even just type up this FXI chart and just say, okay, like this was the big news catalyst. Was there any way to be ahead of this? Then we kept going. One interesting thing I've noticed here is, guess what? This was a news catalyst. We held prior bar lows every single day until there. So is there some type of swing trade available where you get a huge news catalyst, we do huge volume, and maybe I give it to prior bar lows, maybe I give it to the unaffected price, maybe, you know, this is essentially like the Qualamagi type episodic pivot, maybe I give it to a moving average, and then you go back and you test some of that. But you reverse engineering is a way you can just kind of very easily go back through some of this stuff without being overly crazy data focused. I lost my chat. Hey Lance, did you think China stocks on 9/27 was potential capitulation play? How do you select the best stocks between all the Chinese? Okay, this is an important question, actually. And then thank you, Kushal, for yeah, I agree. Most people wouldn't mind. I guess I could, in theory, probably pause some of this stuff, but I think at the end of the day, my voice is just not gonna make it through these regardless. I don't have that good of a voice for this stuff. Yes, I think even if I took a 5 to 10 break, I'm screwed. But your question was, but thank you for the concern. 9/27. Did I think this was a capitulation play? So let me see. Was it this day? So you asked me about 9/27. My question back to you is, did you perhaps mean 9-30? Because so would I say that, did I think this was a capitulation day? Like, no, not particularly. Like one, I believe this was new. This was when new stimulus was announced. So I almost believe this was kind of like a day one again, where this was new catalyst. This was follow through. This I'd view as more the, oh, so okay, got it. Yeah. So no, for the reasons I'm about to explain, no, I view this day as far more the capitulation day. Because again, we had just super new stimulus announcements. And so I view this almost as just like new catalyst day one on 9/26. And so this to me was just day two. And the volume was not so great on this day two. This was a really big gap. So this day was interesting to me. Then you need to be scared as shit on that day. But no, this specific 9/27 did not interest me. As far as how did I think about what stocks to play, in general, I'm looking for what stocks are making the most overextended moves. I'm measuring that with the Bollinger Bands. I'm measuring that versus the moving average. I'm measuring that how far do we go on this gap versus how far we're going now, right? Like essentially on this 9/30 day, we gapped like almost the whole amount of the initial news gap on that first day. So I'll type up like all the tickers. You know, this like, I mean, this Futu wasn't so crazy, but we got crazy later. So a lot of the times I'm just typing through and using a lot of these different measures. You know, distance to the moving average, distance over the Bollinger Band. How far did we go initially? Like what was so interesting with this tiger is what made this tiger so appealing to me is on the initial stimulus news, like this ticker wasn't going that far. Then, you know, on like the first two waves, we barely moved. Then we just started going just absolutely ape shit. And so then like this final move was $6. Like we didn't even go $6 on the news. So now we're doing a whole leg that's moving so much further than the actual move on the news. Like, why are we going so far five, six, I mean, how many days? No, we're talking like, 7, 8 days later, we're doubling the move. It's like, whoever's buying at $14, where were you when this was at $5 or $6 or even $8? Like if this was such a buy at 12, 13, 14, you should have been buying it at 8, not up here. Your expected value is awful there. So I'm really just typing up all these charts and just doing all these measures to assess. Then ultimately, sometimes you end up just picking like shitty tickers. Like I really thought this this tiger was very good on 10-2, but then we held up, whereas stuff like LX, I think it was LX. This, and maybe it was, well, I guess LX didn't do anything. I don't know. But there were some tickers that like definitely died more than others. And I think there's like, you can have a system for how you pick them based on these metrics, but there's still always going to be some level of randomness to it. And like, I don't know who was buying all this day in Tiger. Like this seemed like the best move, but there was just like an infinity bid. And guess what? This ended up going super crazy, but then that was actually the best play. So there's some randomness, but it's a lot of just measures of Bollinger Bands, moving averages, and kind of that logic. Okay. I'm just reading some of these questions if you give me a minute. Lewis says, I'm pretty consistent for the most part on my trading and sticking to my plan, but I've noticed I have days that when I take a big loss on my setup or end up missing it, I tend to go to a different trading style to make up what I missed or lost on. This is definitely a psychological thing. He gets caught up on the day-to-day P&L and have the bad urge to make it back when in fact I should not focus on that. Yeah, so stuff like that's important. And then like the real question is then how can we kind of avoid that from affecting too much of our trading? So a lot of the times, like the first step to fixing some of this stuff is just like awareness. And once we're aware, then we can start to create rules. Like, so I've seen people where they'll have a really, really good day. Then the next day they end up overly aggressive. And it's just a super, super common pattern. They think they're on a hot streak. It's less opportunities. So then what they need to do is they need to create a rule where it's like, okay, if I have a day over 10K, the next day I need to be super cautious and I'm only going to risk 2K in the first segment and then check in. So my answer to you would be like, I mean, first step is awareness, which you seem to have, but then like, if the data is there and you can't otherwise prevent yourself from trading, if you take a big loss, maybe that means you can't trade anymore that day, at least until you overcome that. Or if you end up missing something, it's one of those things where instead of rage trading, you need some type of rule to not make up what you missed or lost on. And again, if we can't do that, like sometimes like willpower is just weak. And if we can't do that, we need to just shut things down. And one thing you mentioned, and this kind of came up before with some of the bobblehead stuff, so many people get caught up in that day-to-day P&L curve. And so one thing my friend did is he has a graph of his lifetime P&L, and his lifetime P&L essentially is like that. And when you have that visual representation, he is that every single day on his screen. When you have that visual representation, it's a very good just reminder. And so I would say like that's one good idea to help you with that. And it's one of those things where it's like, even for me, every single day was up, down, up, down, up, down, up, down. Anytime you fall victim to that, like it's just like you're giving in to what makes this job hard. And the more you just focus on the long term and knowing that over time you're going to do well and on that big picture P&L, the more you can focus on that, you're making life easier. But I would say a lot of these psychological things, it's hard to give just some magic fix, and you kind of need to just dissect these on your own and work through them to some degree. Let's see. Rajan asked, do I think breaking 4 a.m. highs or lows is a valid breaking the 4 a.m. highs/lows is a valid data point? Often no. I don't. I don't view that as a level, because I mean even stuff like Baba and some of these Chinese stocks, like sometimes these are trading overseas and everything else. So like my personal belief is almost never would I necessarily be using that as a valid level unless like I want like a very, very clear setup. No, in general, I don't find that valid. What sort of sample size do I give before I start making changes in my trading? It's hard to say. It's very situational. But what I would say is that I do tend to weight the most recent data points higher. Meaning like if my trading if I'm generally 40 out of 50, like I win 80% of the time, then all of a sudden I'm going 4 out of 5, 4 out of 5. I do want to, as far as losing, sorry, 4 out of 5 losses, 4 out of 5 losses, the opposite. I do want to start to size down. So like too many people, like, again, I don't think one data point is enough to change anything. I don't think 2 data points is enough to change anything. I think once you start to get like 3, 4, 5 data points, you really need to start to adapt and size appropriately. And the other thing I would say is like, things are often very qualitative as well. Like, for example, there was a time when semiconductors, like when SMCI was breaking out, all those semiconductors were breaking out. Every breakout was just working and they were exploding. If I start to see after 5 amazing breakouts, if the next 2 or 3 work, but they're kind of like lame, like take for example this MSTR. Oops. This MSTR breakout, like this was kind of a lame result. It kind of then melted. Like I'm not saying this won't go, but it does make me a little bit more cautious. Like I do view this as an interesting data point. Like this was a pretty good setup. We broke out, like volume came in pretty good and then we failed. So like that doesn't mean I won't necessarily be long this at all or look for setups, but that will make me cautious. And even, like back in the semiconductors, when we saw Micron absolutely melt, like when we have some semiconductors melting like this for the first time after years of semiconductor bull marketness, like I do like if some semi broke out to the upside, I would have to be super cautious, way more cautious buying that now that I'm seeing like some signs of weakness. So not everything you even necessarily need to wait for data points. Like even take CPI in 2022. The other thing is sometimes that like the market's only going to care about stuff for so long, right? Like once you get like 5 data points of, oh my God, there's inflation. Oh my God, there's inflation. Oh my God, there's inflation. By the 4th, 5th, 6th, 7th data point, like, okay, we get it. There's inflation. Like the shock factor starts to reduce, and therefore, like my sizing and stuff, I start to get more cautious. So you don't even need necessarily to wait for stuff to fail. Sometimes you can even be a little proactive in that regard. But there's no magic answer at the end of the day. Curry asked, would you consider someone a boom and bust trader if trader is having 60 to 70% red days, but making big on, I mean, I don't know if there's so many different ways to trade. I don't make any judgments about any type of trader. I don't think one's better than the other. I think psychologically, it's way easier to have consistent profits. Like I think psychologically, it's way easier to be someone that's positive 90% of the time. You just chip away. It's way harder to be the trader that's positive 20 to 30% of the time with big home runs. But like, one's not better than the other. Like I was more of a home run trader. So I was more of the person that's positive 50% of the time, but my winners are way bigger. And my sole goal was I wanted to make as much P&L as possible. I was optimizing for P&L, right? There's traders that optimize for psychologically easy. They just want they want to make their 2K, their 5K, their 10K, whatever. Like there's traders at Trillium that are positive almost every single day. That being said, like you can't be positive every single day if you're going massive on the home runs. Inevitably, something doesn't work out and you take a massive loss. And so, like, they were playing the consistency game, and I was playing the give me the most money and the highest P&L game. That doesn't mean one is right or wrong. Like, it was like different people are going to choose different things. Yeah, hit me, Roberto.
Very interesting topic. So you always say that you started to find consistency with two traits: the tech dislocation, the order flow imbalance at the open on quadruple witching and stuff like that, and the exhaustion gap. How did you do that transition from finding those easy money layups to the big home run trader that you are now and you were back then on the top of your game in Trillium?
Yeah, I mean, I think part of it was one part was definitely role modeling, where my trainer happened to just be a big home run hitter. Then the other part was, again, like most things I try to attack just like with just logic and first principles. And like I was very well aware that the name of the game is like so at Trillium, on a lot of the summers, like summers would tend to be slower. And so they would do this fun little contest. It was like this $2 bill contest where it was something like if you're positive, I don't remember the rules, I'm going to butcher this, but if you were positive like 5 days in a row, they would give you would get like a $2 bill for like every $5 for every 5 day positive streak. There was something about $2 bills and positive streaks where you'd get like people were trying to get like a bunch of $2 bills. And so that like in this, and I know why the firm was doing that, right? Because in the summer it can be slower, and a lot of people can, when it's slower, just lose money, lose money, lose money. So they were trying to incentivize people and kind of gamify it to like, okay, guys, we're just trying to be positive every day, positive every day. And you would get people that would, because there was this little game going on, they would be positive each day, but then a really good opportunity would happen. And if they were up $5,000, they would risk 4K in the opportunity, which might be really, really good when they should be risking 10K or 15K. And so they would end up making, $10 in $2 bills, but they would lose 15 grand in P&L, and like, that's like a little microcosm for, I think, just big picture. Like, you can favor consistency versus home run swinging versus home run trading, right? Nothing forces you to bet big. Nothing forces you, like obviously to some degree, you definitely want to always change your bet size, but like nothing stops you from betting like a little bit more linearly. You kind of get to choose how much you want to implement this. But I realized that like, hey, this $2 bill game is just a game, and consistency is the psychologically easier path. It helps you with the feedback loop, but like my goal was not to take the psychologically easier path. Like my goal was to make, like I wanted financial freedom. I wanted to make millions of dollars. And actually one of the best traders in my starting class, super, super, super consistent guy, and really great guy, amazing trader, amazing just human being. And he played the consistency game, and he was always good for six figures, mid six figures, made a nice living for himself. But I never played that game. I wanted the millions. I wanted freedom beyond any doubt. So it's there's nothing wrong. It's just what's right for you. Yes, Kashal, hit me.
Hey Lance, I hope you can hear me.
Yep.
Yeah, before you're talking about how some traders would prefer to, go for like keep their mental aspect of trading better, irrespective of going for profits. I just don't understand why anyone would do that. Like we can work for mental aspect of trading outside the trading. We can meditate, we can like do other stuff, like keep our daily habits peaceful and everything. But when it comes to our trading system and trading practices, I think it should always be going for best profits or making money, right?
Yes, it's, I would say yes, but I'd also say it's more complex than that. Like, one, there's just going to be personality differences. Number one, like some people do want a just consistent living without, like, there is a cost to emotional swings. There is a cost to like stress, sleep, headache. Let me tell you, like when you take some massive rip, you're definitely like, you're taking an emotional hit. It is affecting the quality of your life. If anytime I lost 6 figures, 7 figures or whatever, like that is definitely affecting the quality of my life. So for some people, like they care about that. The other thing that I wouldn't discount and underestimate, especially early on, the positive feedback loop from being consistent is incredibly powerful. Like I would say for most beginner or intermediate trainees, like, and Trillium, I mean, Trillium really emphasizes this, and they learn to really emphasize this. Like the number one thing they look for in trainees is building consistency. They know that, look, long-term size will come when it comes, if they want it to come. But consistency is what keeps people out of these, like, it keeps people from quitting. It keeps people from giving up on themselves. It just helps people stay motivated and everything else. And I've seen so many trainees that don't do well. Like it's very easy to intellectually say, oh, hey, I'm going to find balance in other places and really push for P&L. But I think for most people, it's just not that simple. We're just complex humans. And I've seen so many trainees crumble when they get in P&L holes, and it just kills their motivation. It kills their work ethic. And it's like, so it's not as straightforward. Yes, I agree with you clearly, because I played the maximized P&L game. But I don't know if it's as clear cut as that. Again, I do agree and did what I did for a reason, but it's not so clear cut. And I think people can have very different value sets. There's a lot of people that are going to be super happy just providing for themselves with stability, being there for their partner, being there for their kids. There's a lot of people that say, hey, look, I'm going to miss some home runs, but I'm going to every single day, I'm going to pick my kid up from school. So, you can't, it's harder, more complicated than it seems.
Yeah, great points, Lance. I see that. I definitely see that.
Yep.
Yeah.
Yep. Let's see. If you are positive daily, following your process, are you not pushing yourself enough or being complacent? So this is an important question. I don't think necessarily if you're positive most days or every day that it means you're not pushing yourself enough or becoming complacent, but it might mean that your bet sizing might not be optimal, at least if we're trying to maximize P&L. And so it kind of ties into this whole subject where there's a lot of people where if you're playing that $2 bill game and you're trying to be positive, like if you're positive every day, it probably does mean that like over at some point there was a really good trade. And look, there's times where your really good trades, they just work out, so you stay positive. But like inevitably there's something where like you bet bigger that you can't offset with the rest of the stuff during the day. Like I guess the point I would make is, let's say we're playing poker each day. Like if you're positive playing poker each day, you're probably doing something wrong, because inevitably you got a really good hand and probably didn't bet aggressively. It's just a mathematical inevitability that at some point you should have been betting more on the really good hand and you didn't. So I don't think it's necessarily complacency or you're not pushing yourself, but I do think I think if anyone, man, I got to be a little bit careful with this. I do think if anyone is probably positive 80% of days or more, you're probably leaving money on the table. There probably is excess liquidity you should be taking, and you have really, like if you're positive 80% of days, you have really, really high expected value. It does mean you should probably be taking more size, which probably lowers your edge slightly, but you are not pushing your size enough. I do think that's probably almost always true, maybe. So it's, yeah. So then Rajan's asking me questions about Magnum Opus. So first he's asking, what are the differences between free, advanced, and elite? Will Patreon members be able to lock in the discounted price, or will it go up over time? So first things first. So all of this will eventually just be public and out there. So I don't want to waste too much time. But essentially, the free version is going to be the base level course. Probably 50 plus videos. It's going to be really, really incredible stuff. Like I think any paid member is still going to be watching all the free videos just because they're still very, very good. The advanced and elite parts. So it then is going to, there's going to be some paid course videos, essentially premium course videos that are a little bit more granular. Like especially my general model is the free video presents the topic, presents all the concepts and the advice. A lot of the premium videos are then the case studies where I just give real world examples. So that tends to be big picture, the difference. But then the difference between advanced and elite is going to be where it has all the AMAs, all the monthly top ops, all the meetups and all that other stuff. So essentially, what you guys are largely doing, what we've been doing as part of the Patreon model is kind of what the elite version will look like, with tons of just like bonus content and templates and checklists. So it's really just like the full package of everything. The advanced, I don't think will include like some of the AMA stuff and some of the meetups and everything else, just because I want to kind of keep the AMAs somewhat reasonable. Yeah, AMA is Ask Me Anything, which is just this. Like essentially, we'll see how I'll need to figure it out depending on size and everything else. But essentially, the elite version is going to be everything we're currently doing, plus just the course in very high level quality videos with all the case studies and everything else. And I will be growing it throughout the year. So as far as locking in the discounted price, so my again, nothing's set in stone. So take all this with a grain of salt. But in theory, I'm going to do some, if I can get there on time, I'm going to do some type of Cyber Monday pre-sale for the Patreon people. Again, my intent, again, I'm not certain, don't hold me to this. My intent is to do 50% discount, probably just through year end. So I'll give people like a month and a half to decide, month and a week to decide whether they want to participate. And again, all this information will be presented at that time. So will it go up over time? I mean, I don't know, I guess. I mean, I assume the discount for the Patreon stuff, I don't want to have it forever. I mean, I guess I could have it forever. I don't know. I actually, like, I don't even fully know the back end yet. Like, I kind of have a team that operates this, so I don't really know what is and isn't possible. So I don't know. I guess the bulk of it is it's going to be awesome. And a lot of the videos will be just very, like, imagine every concept I've ever wanted to go over, but just in very high production quality with really good graphics and everything else. And then all the AMAs and the top ops, ideally also done at better production quality. Will there ever be a New York City meetup? Absolutely. I've done New York City stuff in the past. That's easy because I'm inevitably in New York multiple times per year. And so yeah, part of the meetups, like I'll end up inevitably just doing fun stuff at all the major cities. Or if I ever travel anywhere for some of the nonprofit work or whatever else, so we're talking like Chicago, LA, San Diego, Miami, New York, all that stuff, and wherever else I end up going. So that'll be good. Yeah, thank you, Tara. Glad you learned a lot. Then obviously all these end up being posted online. Any final questions? You okay? Any before I get to Roberto with one last question? Anyone want to sneak one in, or are we going to Roberto? Going once. How much poker have you played in your life? Shockingly, not that much. I'm not despite all my poker analogies, I just think it's very good to compare to trading. Poker's fun. I mean, I think when I was a kid, with all the Texas Hold'em became popular and all that. But the funny part is outside of like Traders for a Cause and the poker event that happens once a year, I would guess I've played poker like 5 times in the last 15 years. And I don't actually think I'm that good at all. I used to probably be okay, but I'm not that good anymore. Okay, Roberto, all yours, brother. Last question, because my voice hurts.
Yeah, that's why I took my shot. So this of course, I always have to ask you about breaking news. So, I can understand why offerings could be labeled like easy money trades because, it works mostly on low floats and there is limited scalability there. But on several top ops videos, you called or labeled some M&A opportunities as an easy money trade instead of a big up. So I want to understand what piece of information should be considered for making the right differentiation. Okay, I can scale this
Yeah.
M&A headline versus this other.
My short answer to this is like I think people just kind of sometimes I just wouldn't overly read into some of my terminology. Um yeah, I just wouldn't overly read into it. And it's like I don't know that I'm putting that much thought into like, oh my God, this was a big home run trade versus this was an easy money versus this was the play of the day. Like it's I would ultimately just, some stuff is just slower and easier versus some stuff that's faster and much riskier. Some stuff's more scalable than not. I don't have any like super great reason. So I wouldn't just like overly interpret like, like one of the questions was how do you define, and I think this might have been on Twitter. I don't remember if it was Twitter or here, but someone's like, oh, how do you define the play of the day? And it's like, look, like, I don't know if I have some super precise definition, and I'm not sure I'm following any like super intense logic other than like, yep, for various reasons overall, like qualitative, like when you think about all the top ops I've done, I wouldn't be shocked if every single month I've ever done it, I'm missing some opportunity that's better than what I listed. So I just wouldn't take anything as like, oh my God, like this was an easy money rather than a home run, but I thought this was a home run. It's like, I'm kind of just it's very qualitative and I'm not so sure that I'm not missing a better play or I'm not so sure that so yeah, I just wouldn't overly interpret, I guess. Yep. And then the final question that I'll answer from Tara. Again, sorry if it's Tara. I've probably made this mistake 9 times now, but if you are not a poker player or an athlete, so I don't necessarily think that playing poker or being an athlete has some massive correlation on being a good trader. I think there's some overlap. Like I do think you do need to be coachable and need to understand uncertainty and expected value. Like I think both poker playing and being an athlete has a lot of similarities. But here's the reality. Most of the traders I know were neither poker players nor athletes. I don't consider myself an athlete. I don't consider myself a poker player. Like I understand poker and the concepts, but like, if you put me in a casino, I think most real poker players, I'm going to lose to every single one of them. So no, I don't think I just think it's a lot of good analogies and there's a lot of good crossovers. And I think for anything that's performance based, whether any sport and to get great at any craft, I think there's a lot of commonalities. So I think that's why you end up getting so many analogies. Okay, that said, we are now at almost 3 hours. My voice hurts quite a bit. It has been an absolute pleasure. Thank you all for, I'm glad to hear I've been pronouncing the name well. Thank you all for your attendance. I love these sessions. These have grown so much versus even 6 months ago between the quality of the questions, the participation. I love doing these. So thank you all. Oh, the other thing that I'll say is I donated another 25 grand to St. Jude. That was a nonprofit that came up a lot at Traders for a Cause. 2 of my fellow panelists were affected by cancer. So again, a lot of good stuff. I like to think I'm helping you guys, giving back to the world, and hopefully doing some good in the end. So thank you all and stay tuned. A couple more months till MO and it's going to be awesome. Oh, and one of the other questions was, will you guys get some sneak peeks? Yes, I can probably hook you guys up with some sneak peeks. I'll figure that out. My life is about to calm down quite a bit in November. And yes, I'll do maybe even around Thanksgiving, if people are around, I'll try to do a New York City meetup. But yeah, I'll keep you all posted. Thank you for the participation and the great questions. Have a good one, everyone. Thank you.
Hey, thanks a ton, Lance.